Go to the start of cash equity trading. I'm Francine Lacqua here in London, and here are your top stories. Back to business, China's top leaders will focus on spurring growth in 2023, seeking to revive the economy following 3 years of strict COVID curbs. Asian stocks start the week lower. Elon Musk asks Twitter users whether he should step down as head of the social media platform, saying he will abide by the results. Plus, breaking the deadlock, EU ministers meet to discuss a gas price cap that's almost a third lower than the original proposal. Now, good morning, everyone. Let's take a look at the futures. It's going to be a very difficult week if you're living in the UK in terms of strikes. The picture overall is actually one of gains. Now, we did start futures just about an hour ago, seeing a bit of pressure. There was a bit of cautious sentiment that now seems to be flipping on the other side. So futures for the moment gaining about 0.3%. A couple of stories that we need to watch out for is, of course, energy prices. What we saw overall is actually on yen as well. Now, the big market story today is actually yen strengthening after speculation that we could see a shift on the horizon for Japan's monetary regime if such flexibility actually translates into an exit from Japan's yield curve control or even suggests a higher target for the 10-year government bond yield. Then we're going to see a huge market move. The dollar falling against its major currencies. Again, investors cutting some of the long bets in the greenback while weighing the Fed's outlook on rates. Now, the question that we want to ask today to all of our market guests, including, of course, some of the people coming on in the next couple of hours, not only market strategists but economists, is do they see bonds and equities moving in tandem in 2023, something that we have not seen for quite some time. So I'd also look out for commodities. You can see gas oil currently at 893, Brent unchanged, and then as expected, these equity indices are opening higher, about 0.3% higher. I do want to show you a bit of the VIX index. Now, we don't do this at the open all the time, but we are seeing quite a lot of volatility in today's trading session. This certainly was in Asia. It's not really translating at the moment in Europe yet. That yen, we're talking about 135.80 stocks in Europe getting 0.3%. We're also seeing a bit of a lift for S&P 500 futures. So that's your cross-asset check. We'll get, of course, plenty more on the markets throughout the day. Let's now delve a little deeper into some of the currencies, but also let's get straight to Asia. Let's get over to our Bloomberg MLive managing editor, Mark Cudmore. And Mark, you're looking sadly at COVID death tolls and the rising number of cases in China.
Yeah, absolutely, Francine. I think a lot of the concern in Asia at the moment is about with the reopening of China. What does this mean on the health side? And of course, we do have people wondering what this will ultimately mean in a markets translation as well. So I just wanted to put in perspective what's happening in China. So this is a bar chart showing the total number of COVID fatalities over the last almost 3 years since the pandemic began, as a percentage of population. And you can see that China here basically does not turn up on this chart, with just over 16,000 official deaths. I think there are a few conclusions from this. One is the fact that, unfortunately, with the reopening, we are likely to see a number of more fatalities in China, and we can expect to see some scary headlines. We always knew that this would be a bit of a stop-start situation, but I think we need to put that in perspective. If China does as well as managing the situation, perhaps because their population has had several years to get inoculation, some sense of natural immunity as well, if it does just as well as Japan, well, then that would still be more than 600,000 fatalities. And I think that's the kind of numbers we need to think about, not the kind of, oh, they've got 12 deaths perhaps, or they've got 2 new deaths officially today, those kind of small numbers. We're going to get much bigger numbers, and that's quite a tragedy, I think, coming ahead. I think, though, on the flip side, from people who are trying to trade this from a market's perspective, Never mind the ethical issues of trying to draw too close conclusion between deaths and market conclusions. It's also just not a very good idea markets-wise. I think you can look at the experience the last few years of India, similar population here, and if we talk that at similar percentage-wise, that would be more than 5 million fatalities in China. US, UK numbers associated to more than 4 million fatalities in China in terms of percentage terms. And what we saw in those stories, and all these are a great example of it, is the fact that actually markets didn't really care about the health issue. That was a social issue, it was a tragic issue, it was a humanitarian issue. But ultimately, markets cared about when economic activity was happening, i.e. how many official restrictions were in case. And equity markets looked forward to the fact that, hey, once this reopening happens, once this wave happens, economic activity will support the stock market. And it doesn't matter that if it's a bit stop-start, if it doesn't matter if there's a bit of self-isolation from people. So I think that there's two conclusions. One is, going to be quite tough for the next couple of months in China, and I think people should prepare themselves for that. But I think that both from an ethical point of view and from a smarts point of view, don't mistake this for being a big market story in the most straight line correlation. It's a lot more complicated than that.
Mark, thank you so much. Mark Cudmore, of course, for some really important data, difficult to correlate with the markets, but Mark really explaining very well exactly, the perspective through which we should look at it. This is a picture overall for the next couple of months, still going to be about what everyone thinks the Fed will do. The chair, Jay Powell, just on Wednesday seemed to have a new North Star to guide his fight against inflation. It will put American paychecks, we understand, at the heart of monetary policy next year. Here are what some guests thought about the Fed.
We have clear signs that demand exceeds supply in our economy and our labor market.
We're going to go until the job is well and truly done, which is 2% on average inflation.
We're going to have to do what's necessary, again, sufficiently restrictive to bring inflation down.
We're going to have to move rates up, ongoing increases from the current rate to above 5%, and hold there for some time in order to get inflation back down to 2%. And that's what we're about doing right now.
Fed officials, they're reinforcing really their hawkish message. Now, talking about markets, so joining us now is Valentine Henouz, Mundi Asset Management Deputy Head of Developed Market Research. Valentine, thank you so much for joining us. A lot going on in the markets. I think the one question that everybody has for 2023, is it the year where finally stocks and bonds behave in tandem?
Yeah, we think that at some point, we think that we are moving a bit longer on duration, and we think that in the first step of the year, we expect some correction on risky assets. We think that we are not completely comfortable with the rally we have in recent weeks. This rally was supported by the scenario that lower inflation will allow central banks to deviate from their aggressive trajectory before a recession or a sharp slowdown in growth. But the probability attached to this scenario has declined significantly. Yes, we see some signs of moderation on headline inflation, but central bankers, both the Fed and the ECB, remain partly concerned by inflation, and they were not very happy with the recent easing in financial condition. So really, the
Valentine,
Fed,
are you expecting? Yeah, are you expecting a comeback of U.S. stocks in 2023?
Yes, we expect first some correction, and then we expect to have a good entry point. But first, we remain now quite cautious on risky assets, both equity and also the low high-rated issuers.
So, Valentine, is this because the markets don't price in or understand what the Fed is telling them, which is they will remain very hawkish?
We think that the market does not really integrate the economic activity slowdown that will be needed to bring inflation back to 2%. Definitely, as all FOMC policy members said, they will have to lower economic activity to have the supply and the demand better aligned on the labor market. But this is very, in the US, a story of demand that is exceeding the supply. So they have to tighten financial conditions.
Valentine, when do you see actually the entry point? So you say there's going to be a bit of a correction and then there'll be an entry point. Is that going to be dictated by what central banks will do? Or is it just at some point that stocks will be too cheap to ignore?
It's a tough question. I think first, the market now didn't really buy the hawkishness of the Fed. So first, we expect in the coming weeks the markets to pay a bit more attention to economic data, inflation, and the tight labor market. And then so we expect some correction. And then we expect a much more pronounced slowdown in economic activity. The risky assets should start to price this sharp slowdown in economic activity that we are expecting in H2 2023, and then at this point that will be a very good entry point on risky assets. But now, too much complacency are priced in the market, too much.
So, Valentine, are you still expecting that terminal rate in the U.S. to be at around 5.25%, or could that be pushed higher?
We keep this expectation of 5.25, but there's clearly upward risk remains. The U.S. economy, even if we have some disappointment with the last retail sales data, the U.S. economy continued to be strong, supported by the decline in the price of oil, tight labor market, excess savings accumulated during the COVID, and on the corporate side, the very low short-term refinancing needs of companies. So we still have a very strong U.S. economy in the very short term, and the Fed that will continue to remain hawkish. So that will offer some support to the terminal rate in the short term. And the
Valentine, I have to say, yeah. Valentine, I mean, it seems that, every yen trading floor is jazzing with rumors about what the Bank of Japan could do and more signs of a hawkish pivot. Do you think they'll do it this time?
No, we think that we will continue to expect VOG to remain, to continue to keep its policy at this stage. No big change expected.
So a lot of noise for nothing.
We expect this.
Are you expecting any change when Governor Kuroda steps down in April, or is it too further away and you'd rather focus, for example, on Europe and the UK right now?
Now we are more focusing on Europe and on UK, and also I think that moving into 2023, I will partly focus on in Europe for the financial risk versus credibility, because the ECB was very clear. They want to push interest rates into restrictive territory. They are quite concerned about pressure across sectors because of the high price of energy. So they want to preserve their credibility. They want to increase their interest rates to avoid inflation expectations to become unanchored. But on the credibility, there is also an issue, because the high level of debt and growing financing needs will at some point put some limits to the ECB willingness to tighten its monetary policy, because net bond issuance, net of ECB flows, will more than double next year.
Valentine, thank you so much for all of your insight. Valentine Inus there, Amundi Asset Management Deputy Head of Developed Market Research. Now, coming up, Elon Musk leaves his fate as Twitter's chief executive to a public referendum. So we'll discuss that next. This is Bloomberg.
There is an epic saying in Italy when it comes to family generations that the first generation creates, the second generation expands, and the third generation destroys. And that's almost what happened in the Gucci story.
So hate and love together.
Now I would have a much more experience about those who says I love you and then destroy you. The Gucci family was the strength, but also the weakness of the label.
The situation became dire with Gucci's finances. They were not able to pay salaries. They were not able to pay suppliers. Gucci's really teetering on the brink at this stage.
Multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg.
Welcome back to the Open, everyone. 14 minutes into the European trading day. This is the picture across the board. Now, the Volkswagen is an interesting one because we are seeing a readjustment in dividend from the Porsche IPO. Porsche, a reminder, we'll get onto the stock movers, but Porsche from today is part of the German DAX. It replaced Puma. Overall, there's a bit of cautious sentiment in Asia, but actually that's not filtering through to Europe, where we're powering ahead. European stocks gaining some 0.5%, and then the other story, of course, is yen strengthening after speculation that a shift could be on the horizon from Japan's monetary regime, something that our guest, of course, from Amundi was really pushing back against. Now, media reports say that the number of COVID-positive dead in Beijing's funeral homes is surging. This, of course, is raising concern that China is actually hiding data amid the worst wave yet. Joining us now is Bloomberg's John Liu, who heads our Greater China coverage. John, first of all, this is a terrible story. We look at it and think of the families always, but just how reliable is the COVID data coming from Beijing?
Well, I think the issue at the moment is this disparity between what we see on the ground, which is COVID spreading very quickly, very broadly across Beijing, across other parts of China, and then the government not reporting any deaths, reporting this morning, the first 2 deaths from COVID since this pivot out of COVID-0 started in early December. And so that has raised some suspicions about how reliable the data is. Obviously, there have been reports of greater activity at funeral parlors and at crematoriums here in Beijing than normal. There was also a report from Caixin, a local Chinese media, saying that authorities had changed the way that they defined COVID deaths, narrowed that definition so that fewer people would actually be cited as dying from COVID, but instead of dying from underlying conditions.
John, China's major economic conference has also wrapped up. What were the key takeaways?
I think the number one takeaway was the tone with which senior leadership addressed or talked about the private enterprise, the private sector, especially the internet companies. Obviously, a year ago, when we had this conference, the talk was about reining in those big tech giants. Instead, now we have talk of supporting private companies, supporting those tech giants. The conference ended on Friday, and over the weekend, we saw the most senior Communist Party official in Zhejiang province visit the headquarters of Alibaba, as sort of a symbolic embrace of the big internet companies again. And so we expect in the coming year that there will be more done by the government to support them, as opposed to trying to rein them in. And that should spell a really good outlook for the economy in 2023.
John, thank you so much. John Liu there, of course, from, Bloomberg, but in China, looking at some of the terrible data coming out of that region. Now, Elon Musk is asking users to vote on whether he should step down as head of Twitter. The billionaire owner of the social media site pledged to abide by the results of the polls. Well, over the weekend, Twitter announced a policy change whereby it will bar accounts created solely to promote competing social networks, sparking discontent among some users and advertisers. Well, joining us now is Bloomberg Quick Takes technology reporter. He is Alex Webb. Alex, great to have you on the program today. First of all, I was confused about the timing, Because we understand he was in Qatar looking at the World Cup, the final. Qatar, who also has an investment in Twitter, and he puts his poll out saying, like, should I stay or should I go?
Yes, he certainly had a busy Sunday. It seems that there is some suspicion that this isn't necessarily entirely beholden to the vote that happened on Twitter, that maybe he's receiving some external pressure from other investors in Twitter. While he might be technically the owner, there are a bunch of other investors, both the equity and the debt. There might be some pressure from Tesla investors as well. That stock is down 30% since he took the reins, and while the broader market is comparatively flat. So it has happened in the past that he's opened something up to a vote on a poll when he's already actually made the decision. I guess we'll soon find out in the next few days.
So the poll, I mean, I haven't looked at the poll. It takes a couple of days to settle down, but is the poll leading towards him going? And do we have any names that could replace him?
So it's a 24-hour poll, 57% saying he should go at this stage, 14 million votes cast. We don't yet know who would replace him. He is perceived as being quite close to the former Twitter CEO, Jack Dorsey. So that might be a name on some people's list. Jack Dorsey already runs a company, so it's hard to know whether he'd want to be still fundamentally working for Elon when he was sort of his own boss before. The thing that has been said previously about the way his company's run, Tesla might be a colossal success, but it hasn't always been that way. And the company that sort of has been more smoothly run is SpaceX, where Elon is not the CEO. He has a very effective, well, it's a function run by the COO, I should say, my apologies. The COO, Glenn Shotwell, she fundamentally runs the ship, and it's been, pretty successful, partially as a consequence.
I mean, what are people accusing him of? So, certain journalists who criticized him were put off Twitter, but then this is also because they were, live locating him or things like that in certain cases. Is this just that it's just too much, he distracts, or advertisers pulling out?
So kind of all of the above. The thing with the journalist was that there was a Twitter account which basically reposted publicly available information about the location of his private jet. Some journalists had linked to that account, therefore he blocked them for that reason. It's the sort of constant churn of new decisions that seem to be made on the fly without any clarity on what the actual strategy is. People don't know what the content on the platform is going to look like. If you're an advertiser, they're therefore concerned that their ads are going to appear alongside content that doesn't make them look good. So there's been a huge pullback from advertisers. I recommend the people read our colleague's story from last week, where they tell a story about an advertiser being in the room with Elon. He's literally, they ask him, is Donald Trump going to come back to the platform? And he says, I don't know, let's ask the people. And he tweets and puts a poll out right then and there saying, should I let Trump back on the platform? It's a lot of noise without necessarily what the direction of travel is.
All right, Alex, thank you so much, as always, for your insight. To Bloomberg Quick Takes, Alex Webb there, who covers technology for us. Now, coming up, EU energy ministers hope to break a deadlock over proposals for a gas price cap. That's as Germany opens its first LNG terminal. We'll have all of the latest on the EU's energy crisis next. This is Bloomberg.
There's more activity in the fusion world than ever, and not just in government research labs. There's also an emerging private fusion industry that's attracted billions of dollars in capital in recent years.
Governments and private investors alike realise that we've got to find a solution that's going to allow us to get to net zero targets.
This is one of the hardest but most rewarding problems that humanity could work on. Ultimately, we all want the same thing. We want someone to put electricity on the grid from a fusion power station as quickly as possible.
Frankly, the scale of the challenge, 3,000 gigawatts of fossil fuel to replace, there's not many things that can do that. In fact, there may only be fusion that can really do that.
And while many in the scientific community predict fusion power will take decades, some in the private fusion space believe we'll get there in just a few years, as soon as the 2030s.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power.
This is Bloomberg.
Welcome back to the Open, everyone. We are 23 minutes into the European trading day. We thought we were going to start with a cautious sentiment. Not so. But you can see European stocks are actually powering ahead, gaining some 0.6%. The yen also strengthening after speculation that a shift is on the horizon for Japan's monetary policy regime. Now, let's get straight to the Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. Sam Bankman-Fried is said to be planning to drop his fight against extradition to the US. Sources tell Bloomberg that the disgraced FTX co-founder is expected to tell a court this week that he won't fight the request. He's currently being held in prison in the Bahamas. He denies knowingly committing fraud or breaking the law. China's top leaders say they plan to focus on boosting the economy next year, hinting at business-friendly policies. At the Central Economic Work Conference, Xi and other senior officials pledged to revive consumption and support the private sector, a marked shift from recent years. Economists say policymakers are likely to target GDP growth of at least 5% in 2023. Intel will reportedly delay construction of its planned German chip plant in a blow to Europe's semiconductor ambitions. Local media reports that Intel is seeking more government subsidies as costs for the mega plant in Magdeburg have jumped to 20 billion euros. The chip maker says much has changed since first announcing plans for the plant earlier this year. That's the Bloomberg Business Flash. Francine.
Thank you so much, Laura Wright, here in London. Now, these are the stocks on the move. We did have Porsche. We mentioned it right at the top. Porsche actually making it onto the DAX. This is because they superseded, because of their market cap, of Puma. Volkswagen shareholders also approving a dividend from the Porsche IPO. This is a related story, but of course it's another stock price. Porsche, again, replacing Puma, Germany's DAX index from today. And the stock price is gaining 2%. Now, the other story we're watching out for is, of course, Adidas. This is on the back of the Lionel Messi win. We had a great story on the Bloomberg terminal just on Friday that Adidas scrambling to keep up with demand for jerseys featuring the Argentine football star Lionel Messi ahead of the FIFA World Cup final. The share price not moving much on the back of it, but certainly a lot of people, I'm sure a lot of young kids will want a Lionel Messi football shirt, and there's still quite a lot of celebration across the world, especially in Buenos Aires, I'm reliably told. And then AstraZeneca, this stock price is down some 0.7% after a bit of disappointment on one of their trials. This is, of course, on the Pearl phase 3 of the Imfinzi monotherapy. Coming up, a focus on Japan. We look forward to the BOJ's policy meeting tomorrow with reports of a major shift in the central bank's relationship with the government. That's coming up shortly, and this is Bloomberg.
advisor to the President of the United States on infrastructure and manufacturing, but on infrastructure, you've been involved with the legislation that was passed not long ago. Why is the United States infrastructure so terrible compared to so many other wealthy countries?
I have been around U.S. politics like you for a couple of decades and have served a variety of presidents from the different parties. And the attitude in the United States is obviously to keep taxes low and keep the public spend under control. And the word control is interesting, but that stops forward thinking in terms of planning. And therefore, the short-termism around our fiscal policies has hurt us. I mean, in essence, infrastructure is a long-term return. And to get a long-term return, putting it into private hands is one way of doing it. But really, the public side of life has to be willing to do the forward spend. The forward spend on airports and roads and EV charging stations has to come from the public domain. Now, raising taxes to spend money on infrastructure means you've got to trust the people doing the spending. And I think the public-private model is the way to go there, which is actually create an infrastructure bank that is U.S. public sector owned that has private sector matching funds. I think that sort of breakthrough has yet to occur in the United States. So where we go is tax and spend, which unfortunately one side of the aisle disagrees with.
You will shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
Welcome back to the Open, everyone. We're 30 minutes into the European trading day, and here are your top stories. Back to business. China's top leaders will focus on spurring growth in 2023, seeking to revive the economy following 3 years of strict COVID curbs. Asian stocks start the week lower. Elon Musk asks Twitter users whether he should step down as head of the social media platform, saying he will abide by the results. Plus, breaking the deadlock, EU ministers meet to discuss a gas price cap that's almost a third lower than an original proposal. Now, we're also getting some breaking news from Madrid, actually, from Mr. De Guindos. He's the ECB vice president, and he's giving a speech at the new Nuevo Economia Forum in Madrid. Now, he's saying at the moment that the ECB will have to assess QT in June. He says that, of course, the withdrawal of that QE must be carefully planned. He also says the ECB to keep raising rates by 50 basis points. Fiscal policy, Mr. De Guindos says, should not clash with monetary policy. And, of course, this is from the ECB vice president giving his speech at the Nuevo Economia Forum in Madrid. We'll continue following that very, very closely, and we'll bring you any breaking news that we have from Mr. De Guindos. A couple of other things we're watching out for is, of course, the markets. We did have some cautious sentiment over in Asia. This is not really translating in Europe, where we're seem to be much more risk-prone. There's no reduction of appetite for riskier assets. If you look at equities, they're actually gaining in today's trading session. The other thing we're watching out for, of course, is yen strengthening after speculation that a shift is on the horizon for Japan's monetary regime, while the yields on Japan's benchmark 5-year note touch the highest level in more than 7 years. Now, that's the story out of Japan, and of course, we'll have plenty more on the yen throughout the day. If such flexibility does translate into an exit from the yield curve control, then we could have a higher target for the 10-year government bond yield. So let's talk about the yen, and let's talk about what's going on in Japan. Joining us now, Jeremy Stretch, head of G10 FX strategy at CIBC. Jeremy, thanks so much for coming on.
Good morning.
There you go. You come on, and there's a lot of yen news. How happy are you about that? Do we believe them?
Well, I think we've been waiting for the end of the Kuroda era for some time, and obviously the yield curve control strategy, including the massive accumulation of JGBs by the monetary authorities, does raise a number of questions. And so I think we are getting towards the end game, and I think it makes sense that we will see an enormous number of source stories over the course of the next few weeks and even to the next couple of months around what's going to happen to BOJ policy, because I think there is an expectation that we are going to see some degree of policy, if not normalization, but at least adjustment away from the yield curve control strategy that we have now. And that should be supportive for the yen.
I don't know, Jeremy. We've been promised this hawkish pivot for such a long time until Kuroda actually goes, which I think he's due to step down in April.
That's correct.
What are we going to see?
So that's true. So I think, in a sense, we are talking about the next era, which of course is the post-Kuroda era. So the first thing that we need to understand is who is going to be named as his replacement. Now that in itself is going to lead to plenty of speculations, plenty of opportunity. So I think there is, as I say, there's going to be a lot of news flow vis-a-vis the yen and policy normalization over the course of a period, and that is going to create some degree of interest and volatility in terms of the yen. Now, ultimately, I think there is an expectation, and we would certainly buy into that from CIBC, that we are expecting this policy normalization to start to take place after Kuroda's departure. So I think there is and will be scope for a stronger yen through the course of 2023.
Yeah, this is an agreement with the government, and we heard also an aide to Kishida saying that we could see something like that. What are you expecting tomorrow?
Well, as far as the near term is concerned, I suspect not expecting too much is probably the best possibility and the best probability, because in a sense, I think we are still very much in this holding pattern. So I think the policy strategy will be very much a case of maintaining the line through the course of the end of this year and through the first quarter of next year. So I don't think we should necessarily expect too much in the way of any change in narrative or any even hints that there is an adjustment process coming from the Kuroda regime. So I think it is going to be very much steady as she goes in the nearer term. But as I say, we're going to be very receptive to headline risk over the course of the next period.
Jerry, this is our great chart, actually, that Valerie put together for us. I mean, the yen has been the worst performing major currency this year. What happens in 2023? Do you have a target for the end of the year?
Well, I think if we are going to see this normalization process, then I think we can and should see some degree of reorientation, if I want to put it that way, in terms of the yen. So I think there can be a strategy where you would expect the yen to be a gradual and progressive recovery story. So obviously after those peaks up north 150, and we saw those intervention episodes, which of course didn't deal with the fundamental problems as far as the yen were concerned. I think as we get to that normalization process, then I think we can head back towards the sort of 130 area, and perhaps potentially going all the way back to the once deemed line in the sand at 125, which of course has been left a very long way away and a very long way behind. But I think that's a sort of a target that we could easily have in mind over the course of the next few months.
Jeremy, I feel like it's the month of misery here in the UK with strikes, and we also had a cabinet minister yesterday saying that nurses shouldn't be asking for such pay rises. What does that mean for sterling as we get into 2023? Is there a point where investors will come back in?
Well, we have seen progressively, investors sort of paring back some of their sterling short positions over the course of the last couple of months, as obviously we've moved away from that extreme period of political uncertainty that we had at the back end of September, which almost seems like a dream sequence now, but it was a period where investors were clearly fleeing to the sidelines, and obviously we're seeing the gilt market under extreme pressure and extreme uncertainty. But I think the macro narratives in the UK are particularly challenging relative to elsewhere. And so I think even when you're looking at, say, somewhere, looking against the Eurozone, for example, and we see even to the context of the differential in terms of monetary policy identified through the course of last week, and you overlay that in terms of the strike dynamics and the real pressure on UK consumer discretionary spending, that I think it does still feel more likely to me that sterling has an opportunity or a vulnerability, which I think does come back into play. And so I think we could even see euro sterling heading back towards the sort of 90 pence threshold, for example, over the course of the next couple of months or so, because of this presumption that policy is moving in different directions vis-a-vis the Eurozone versus the UK, and the impact and the legacy of the weakness on the consumer side, even before you start to factor in some of those strike dynamics.
What's your take on dollar? If you look at dollar, I feel like the outlook is very much mixed for the next 6 months.
I think it is. I think it really comes back to what markets are anticipating in terms of where the Fed terminal rate actually ends up. And in a sense, if you think about 2022 as a whole, if you think about the dollar's performance, it's been an unashamedly positive year, or certainly the first 9 to 10 months of the year have been unashamedly positive for the dollar, and that's really reflected what's been happening in terms of US terminal rate expectations. If those terminal rate expectations can have another push back to the top side, and you listen to some of those,
so you're at what, 525 terminal rates?
I think we get to the sort of the 5 threshold, but I think more importantly we stay there through the course of 2023, and I think that's where there's still some issues from a market perspective. There is still that sort of tendency to try and price in early rate cuts. I think there's a recognition, or should be a recognition, that the Fed will hold the line in terms of getting to a terminal rate and then sticking there through 2023. If we do see that sort of realization starting to kick in, that probably just provides a little bit of resilience in the dollar in the first quarter. But I think from the second quarter onward, then I think there is an opportunity to start to look to leg out of the dollar and look at perhaps more growth-orientated currencies as we start to think about a slightly more optimistic growth scenario into 2024.
Jeremy, thank you so much. Jeremy Stretch, their head of G10 FX strategy at CIBC. Now, coming up, EU member states need to discuss a gas price cap that's almost a third lower than an original proposal. So we'll get more on what to expect there. This is Bloomberg.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
Welcome back to the Open, everyone. 41 minutes into the European trading day, and the picture across the board is actually one of gains, with the European stock 600 gaining 0.4%. Now, today, EU member states are set to discuss a price cap that's almost a third lower than the original proposal in an attempt to contain the impact of the energy crisis in the region. Now, for more, let's get straight to our correspondent, Maria Tadeo, who's in Brussels for us. So, Maria, what concretely can we expect?
Well, Francine, what we know is that today, in the sense that we've had this morning speaking to a number of energy ministers, is that there needs to be a deal. That's the whole point. This is crunch time. It is really the last effort of the year to get this deal done, and the pressure on ministers gathered today here is immense. European leaders made it clear last week they want to see a deal and they want to see a compromise, obviously on the biggest sticking point, which is the price cap. And it's not just this cap, Francine. Remember, this is part of a bigger package that also includes joint purchases, but this is Brussels. Nothing is agreed until everything is agreed. All eyes are on this price cap. The question is whether or not they seal the deal, but the pressure is immense, and the energy commissioner today said it will take compromise, but she is confident that a deal will finally arrive.
So, Maria, if it comes down to the price point, a lot of numbers, of course, being floated about, where does it possibly land?
Yes, and it really is essentially about a number, as it often is in life. It comes down to that number that everyone can agree with. And Francine, there has been this massive back and forth. We've seen the price range change over the past couple weeks. It started, remember, at 275 euros a megawatt hour for 2 weeks for this price cap to be triggered. It has been lowered now significantly to 188 euros megawatt hour, 3 days for this market intervention to be agreed. Now, we asked energy ministers as they walked through into the meeting, which is now underway, what is the number that you want to see? Everyone is quiet. Of course, this is an active conversation, but the sense that we get is that anything between 180 and 200, that could possibly lead to a compromise.
All right, Maria, thanks so much. Maria today, of course, following this very, very closely, and she'll bring us up to date with any new news. Now, Germany's first liquefied natural gas terminal arrived on the country's north coast, the first of several specialized tankers Berlin is counting on to ease its energy crisis. Now, the German Chancellor, Olaf Scholz, welcomed the move.
This is now the new German speed with which we are moving infrastructure forward, and it should be a role model. This is a good day for our country and a good signal to the whole world that the German economy will be in a position to continue being strong.
Well, joining us now is Bloomberg's Oliver Crook. Ollie, what role will this play in actually Germany's energy complex?
So really for Scholz, this was an opportunity to try to begin to declare energy independence from Russia. You can see the tanker there just behind me. It is a floating storage and regasification unit. It serves two basic functions. The first is storage. It comes with 165,000 cubic meters of LNG from Nigeria. That's about enough power to power 50,000 German homes for a year. And the second is it converts that compressed LNG into, regasifies it into a form that the German network can then take. Gas will start flowing from this ship starting on Thursday. It will go to Germany, but also go further afield to eastern Germany, to nations that are landlocked and don't have sea access.
So, Ollie, will LNG actually solve Germany's gas problems?
So this is the beginning of that process. So what it needed was this infrastructure to accept this LNG. So we were on the ship with Scholz over the weekend. We went by, he radioed over, he said, "Welcome to Germany. We're so happy to see your ship." And you can understand why. The temperatures have been freezing. We saw German gas storage fall beneath 90% for the first time this year. Now the challenge is filling that back up. This facility alone can process 8.5% of Germany's gas needs. There are 6 more of them coming online by the end of next year. That'll account for about a third. So that's the capacity and the infrastructure. But the question is, where will these cargoes come from? They've signed deals with Qatar and the United States, but those cargoes are years away. So in the short term, it's how do you top that storage back up for next winter?
Yeah, and so, Ollie, how does the EU gas cap debate actually fit into all of this?
So this ship really tells that story very well. The virtue of this facility is that it can accept cargoes from all over the world. By the same token, those cargoes can get rerouted by a single phone call. So if the cap is too low, the fear in Germany is that you will not have access to those cargoes. You'll be outbid by other buyers. It's an intensely competitive market already. So in Germany, it creates a lot of angst about where they're actually going to get this LNG in the future.
Ollie, thank you so much. Oliver Crook there with the very latest, of course, from Germany. Now let's get straight to the Bloomberg First Word News with Laura Wright. Hi, Laura.
Hi, Francine. Media reports say the number of COVID dead in Beijing's funeral homes is surging, raising concerns that China is hiding data on the latest wave of the virus. Staff at a local crematorium told the Financial Times they'd seen at least 30 COVID victims. The country of 1.4 billion people says just 11 people have died with the virus over the past month. The EU has reached an agreement to expand its flagship carbon market, extending emissions trading to heating, road transport and shipping. Under a provisional deal, the bloc will also accelerate the pace at which some companies are obligated to reduce pollution. Separately, the UK has signed an agreement with the group, including the European Commission, to develop offshore renewable energy projects in the North Sea. China's top leaders say they plan to focus on boosting the economy next year, hinting at business-friendly policies. At the Central Economic Work Conference, Xi and other senior officials pledged to revive consumption and support the private sector, a marked shift from recent years. Economists say policymakers are likely to target GDP growth of at least 5% in 2023. Zambia's president says the nation is trying to reach sustainable debt levels without damaging key components of the economy or, quote, rocking the boat. In an interview with Bloomberg Television, he encouraged creditors to reach an agreement as quickly as possible.
We certainly expect progress because that's the way it should be, because there's an understanding that the process will run to a point like where we are now, where we can quickly and work through towards signing a memorandum of understanding. And for us to do that, we have to make progress on the issues around what is the quantum of debt that is sustainable.
On air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg, Francine.
Laura, thank you so much. Laura Wright in London. Now, coming up, Magic Messi. We discuss Argentina's win at the World Cup final and what the tournament means for the host nation, Qatar. That's coming up next, and this is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. And the place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg.
Welcome back to the Open, everyone. 51 minutes into the European trading day. We're still holding strong risky assets. This is where the money is, at least for the moment. We did see a bit of a reversal from where the futures were just 2 hours ago. European stocks gaining some 0.4%. Now let's take a look at the key things markets are watching out for today. It's Germany's IFO Business Climate Survey. So tomorrow we then, of course, have U.S. building permits and housing starts. Wednesday, it's Canada CPI, with economists forecasting a slowing of inflation. They're expecting a reading of 6.5% for the year to November. Then on Thursday, third quarter GDP figures for the UK and the US. And finally on Friday, more data out of the US, including a PCE deflator, personal income and spending, durable goods, and the University of Michigan Consumer Sentiment Index. Now, Lionel Messi has finally added the World Cup to his trophy list after Argentina beat France on penalties in one of the greatest finals in the tournament's history. Now, joining us is Simone Foxman in Doha. Simone, the level of excitement, I'm sure, at the stadium. You were at the final yesterday. I mean, how many Argentinians were in the stands? It felt like it was 80%.
It definitely felt that way. There were some 88,000 people in the tournament, and the vast majority wearing the blue and white of the Argentine team. Of course, that's very good for Adidas, which already has said it has very low stock of Lionel Messi jerseys in countries across the world. And now we can imagine that there's going to be even more pressure on the company to get those jerseys in store. But, you know, frankly, it was a thrilling night. There were dozens of world leaders in attendance, also the likes of Twitter's Elon Musk, Jared Kushner of the former Trump administration, so certainly a star-studded event, and of course Emmanuel Macron, who was disappointed as his French team lost, but did manage to give a pep talk, I believe, to the players of his team after the tournament.
Yeah, I have to say, the speech, the pep talk by Emmanuel Macron in the locker room is something that everyone should watch. Now, you also wrote this morning, Simone, that this World Cup stands the risk of turning Doha into one of the most important states, of course, in the Gulf. Tell us a little bit more about that.
Yeah, so the risk here is that the entire metropolis, really all of Qatar, frankly, is mostly Doha, it could become a giant white elephant because, frankly, the country has dramatically overbuilt for its current business and tourism needs. Already before the World Cup, there were plenty of empty residential and office buildings. Now there are 14 to 15,000, or in the next few months, there will be 14 to 15,000 new hotel rooms on the market, and occupancy was already hovering under 60%. So the real challenge for the country now is not necessarily just figuring out what it's going to do with its stadiums, which of course it does have plans for, but it's trying to figure out how to tap into some of the excitement around the World Cup to build the next phase of non-oil economy. And the answer is really not clear because money alone doesn't necessarily do that for you. And it's not clear that the citizenry really wants the kind of open policies that are going to be needed to bring new businesses, bring more permanent residents to live here full time.
So, Simone, what will the legacy of this World Cup actually be?
Well, I think for viewers around the world, certainly this was a very thrilling World Cup, not just the final, but we saw those massive upsets in the lead up. It was well watched across the world, so broadcasters, particularly in the United States, going to be very happy with the outcome. And for the most part, fans from elsewhere are going to say, hey, this went really pretty well. There were no major calamities. You know, the question mark for me, and speaking with human rights activists about this, is whether or not that focus on some of the controversies, particularly around migrant rights, LGBTQ rights, whether we start to see similar things happening with future mega sporting events, because we may have really hit an inflection point, and at least that's what they hope in terms of how much we discuss these issues when we talk about giant sporting events. Certainly that will be a question mark for 2026 when the World Cup is held in Canada, the US, and Mexico, but also if we see Saudi Arabia, for example, go through with its bid for 2030 and potentially winning the World Cup there. Is this a moment for human rights and social issues around sports?
Simone, thanks so much. Simone Foxman, they're fresh after that final. Now let's also check in on some of the stocks that are moving at the open. Porsche, this is a big story because for the first time, Porsche has joined Germany's DAX index as Puma dropped out. Now, it has a market value of around 96 billion euros, and it became Europe's most valuable automaker this year when its market cap overtook that of the parent company, Volkswagen. The other story we're watching out for, and this is Simone also talking about it, Adidas on Friday, even before the World Cup, when rushing to get Messi jerseys in store as there was a bit of a shortage in supply. And then AstraZeneca actually down some 0.6%. Now that's it for the European Market Open. Surveillance Early Edition is up next, and this is Bloomberg.
digital-first approach to the future of work is where the industry and all companies will be heading.
Could the future of work not be at home or in the office, but in the metaverse instead?
There's that word, metaverse.
Doing well. How are you doing?
When I think about the metaverse, I think about immersive experiences that have a sense of active presence.
Wow, look at this. This is me. The metaverse is projected to become over $1 trillion market by the end of this decade. And whether you know it or not, you'll probably be working there in the future.
We're moving into a world where we're going to be interacting with computers with our bodies.
This is definitely trippy.
I think the adoption curve is going to be slow.
It's weird.
Like a weird floaty thing right now.
Oh, look at you. You have no legs.
It's kind of a fun world, and we're just at the very beginning of a very long journey.
Good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, China Open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power.
This is Bloomberg.
Well, it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance, early edition, with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. Well, back to business. China's top leaders will focus on spurring growth in 2023, seeking to revive the economy following 3 years of strict COVID curve, while Asian stocks start the week lower. Plus, breaking the deadlock, EU ministers meet to discuss a gas price cap that's almost a third lower than the original proposal. And the beautiful game, Argentina wins the World Cup after defeating France in a nail-biting final, a dramatic end to a controversial tournament for host Qatar. So we have plenty of stories that we want to get to, but first of all, let's get to the markets. Now you can see the VIX index, it's not that much or not as elevated as some market participants were saying it could be, gaining some 0.1%. The picture across the board for European stocks is still one of gains. Global stocks actually attempted their recovery from 2 weeks of losses, sparked by concern that the continued policy tightening, especially by the Fed in the U.S. and other central banks, would trigger an economic recession and therefore would hit companies' profits. For the moment, we're holding strong, gaining some 0.4%. The other story, of course, is the yield on U.S. Treasuries edging higher than yen. Look at yen, 135.90. We are expecting a hawkish pivot. We have a couple of guests that said, look, this will come, but it won't come tomorrow. We do have a BOJ decision. It could probably come as Kuroda steps down in April. We await to have more news about the agreement between the central bank and the government. The picture across the board, you can see the FTSE gaining some 0.4%, similar gains for the DAX and the CAC. Now, this is a picture for data coming out of the EU. I think we have German December IFO business confidence that's coming out, and that index is coming at 88.6 instead of the 87.5 figure, so it's a touch below estimates. Also, the prospect of further Fed rate hikes triggering a recession is fueling market caution. That's reduced investor appetite for riskier assets, which has sent equities actually lower in the long term. We're joined by Janet Moy, head of market analysis at Brewin Dolphin, and our markets reporter, Justina Lee. So thank you both for joining us. Justina, talk us through what we'll see in terms of volatility as we head into 2023.
Yeah, I think for investors, there are really two big questions here. One is that, where is the Fed going next? And I think what we've heard from them last week is that they're very far from pivoting, if markets even expected that. And on the other hand, if we do kind of stay on this tightening path, what does that mean for economic growth? And specifically for equities, what does that mean for earnings? And so I think investors are really in a bind here, because it can feel like either of those outcomes, is probably not great for portfolios.
Yes, absolutely. Janet, is that your take as well? If you look at the constructive, when do markets actually start being constructive?
Hi, good morning, Francine. Thanks for having me. Yeah, we don't think that it is time to get bullish yet. We think that there's probably a buying opportunity for equities sometime in 2023. But we're warming up to bonds because, the Fed will keep hiking, but it is ultimately near the peak of that hiking cycle. And we think that the Fed will pause afterwards, and rate cut is probably a 2024 story. But after all, bonds look more attractive than equities because you've got yields available, which were not available, years ago. So as investors, we're warming up to bonds. We prefer sovereign bonds at this stage because of the recession risk next year. And so so that's why overall asset allocation is that preferring bonds over equities next year. But there will be a buying opportunity for equities next year.
So, Janet, is 2023 the year where actually equities and bonds will work in tandem like they used to in the past?
Yeah, so this year bonds haven't acted really as a portfolio diversifier, which is actually quite rare in history. So what we think is next year, as I said, we're warming up to bonds. We think that bonds will perform better, and primarily that's because we are seeing the peak in U.S. interest rates, and therefore we think that bond yields will peak and then fall next year. So bonds will act as a portfolio diversifier again. So we think that the bond equity correlation will weaken next year, which would be a good thing for investors.
Justina, how do you look at yen? I know there's a lot of talk. We've been promised a hawkish stance in the past, which we never got. Is this going to finally come to a head because we're almost at the end of the term for Governor Kuroda? I think he steps down in April.
Yeah, I think that's a great question. I mean, obviously, the Bank of Japan has never had to worry as much about inflation. And that's part of the reason why it's never had to kind of tighten as much as, other central banks have. And I think, another aspect to this is, what is going to happen to dollar strength? Because we did see a little bit more in that direction after that Fed meeting last week. But at the same time, if bond yields are peaking, as Janet mentioned, then maybe perhaps we're finally at the end of that cycle, because certainly by a lot of fundamental pressure, the dollar strength can look overstretched at this point.
So, Janet, what do you do with yen right now?
Yeah, so we think that this year the movement in yen has been pretty extreme, stretched, as Justina has mentioned. And we think that, it has been years of this extremely loose monetary policy that the BOJ has been working at. And, as developed market central banks have normalized, the BOJ is lagging, way lagging. So we think that there has to be a point, when things get that extreme and get overstressed, there has to be a point of reversal. And I think that could be sometime next year, as you mentioned, Francine, earlier, that could be a point where the BOJ governor steps down, and then we can see a bit more pivot in that BOJ policy towards a bit more hawkish tone.
Janet, the other thing that actually caught my eye in some of the things that you sent over is your appetite, I think, for gilts. So is this now the time to add gilts, and what kind of, which part of the yield curve do you buy?
Yeah, so we are warming up to gilts. We actually have bought already during the mini budget volatility when gilt yields become very, very attractive. So now we're waiting for further opportunity because we think that gilts will perform better because, well, UK is facing a particularly bad economic situation. It is going to recession. And we think that basically investors are very underweight gilts at the moment. We think that there will be more inflows coming from investors. And we think that we are interested in the 7 to 10 year maturity of gilts. Mm-hmm. And overall speaking, we think that there will be better opportunity next year because the Bank of England is still hiking, but it is going to see headwinds in hiking further because of the UK economic situation, of the very weak housing market. So we think that we are approaching the point of peak gilt yields, but probably not at this moment right now, probably sometime early next year. We're watching very closely in the next 1 to 2 months.
Okay, thank you, Janet, for that. Justina, we also have quite a lot of data out of the U.S., including the University of Michigan, which I think it used to be one of the favorite indicators by some Fed officials. What are you expecting?
Yeah, I think we have a big week for U.S. economic data coming up. And I think it's going to be pretty important for investors because they've been on the lookout for, signs of slowdown. Because I think, what we've seen so far is, the U.S. economy seems to have held up pretty well. But there is usually a lag effect from monetary tightening. And so the question here is, when do we start seeing these signs show up? And at the same time, that could also be a sign that inflation is indeed rolling over, but then there will now be a whole new set of concerns for investors.
Janet, what's your take on when you look at, the Fed officials, but also where you expect the terminal rate? Will it peak at 5%, or do you think it'll go higher?
I mean, taking the face value of what the Fed officials are saying and the dot plot, Fed funds rate will go to over 5%, a little bit over 5%. I think it's not about the debate of the peak rate anymore. I think, there's clear sign of economic weakness. There is, it takes time for that cumulated rate increase to take impacts on the economy and, on core inflation. So we think, 5 is probably about right. I think the debate is probably whether, the Fed will cut next year, which the market continue to be very optimistic on that. So we think that, rate cuts is probably a 2024 story, and as such, markets are optimistic, and probably it's not right now the time to buy equities or be bullish.
So, Janet, you're not expecting a rate cut next year. You're expecting what, early 2024 from the Fed?
Yeah, that's the case.
Okay.
Because we think that, ultimately, okay, the economy will go into recession, but it's going to be a mild recession. So the Fed will still be worried about core inflation, which still, it's going down, but it's still way above target.
Okay, Janet, thanks so much. Janet Moy, there, head of market analysis at Brewin Dolphin, and Bloomberg's Justina Lee. Now, coming up, we'll have plenty more, of course, on energy. EU energy ministers attempt to break a deadlock over a proposed gas price cap. That as Germany opens its first LNG terminal. All of the latest on the EU's energy crisis next, and this is Bloomberg.
There is an epic saying in Italy when it comes to family generations that the first generation creates, the second generation expands, and the third generation destroys. And that's almost what happened in the Gucci story.
So hate and love together.
Now I would have a much more experience about those who says I love you and then destroy you.
The Gucci family was the strength, but also the weakness of the label.
The situation became dire with Gucci's finances. They were not able to pay salaries. They were not able to pay suppliers. Gucci's really teetering on the brink at this stage.
Germany is the engine of Europe, but what good's an engine without any gas?
We're here in the harbor of Wilhelmshaven. We're approaching the LNG tanker that has just arrived that will serve as the terminal to accept liquefied natural gas.
Germany is extremely dependent on natural gas for manufacturing, heating homes, generating electricity, and its chemical sector. It used to get more than half of it piped directly from Russia. This ship converts compressed LNG into gas, and it's a major step forward into filling that gap from Russia.
The ship has arrived from Spain carrying LNG from Nigeria, and the temperatures outside really underscore the degree of urgency here in Germany for natural gas.
They got this done in 10 months. The Chancellor inaugurated it this weekend, and the gas starts flowing. This facility alone can deliver more than 8% of Germany's consumption. 6 more like it are on the way, and that will provide infrastructure to cover a third of Germany's consumption. But that doesn't answer the big question. The infrastructure is necessary, but where will they get the actual LNG itself? With Russian taps turned off, it's a fiercely competitive market, and cargoes go to the highest bidder. Plus, if China reopens, you can have the world's second biggest economy back at the energy table with a big appetite. Oliver Crook, Bloomberg News, Wilhelmshaven, Germany.
Well, let's get more now on the energy situation with Oliver Crook in Wilhelmshaven and Maria Tadeo, who's at the EU Council building in Brussels. So, Maria, let's start with you. EU energy ministers meeting now in Brussels, where they're trying to break a deadlock over a proposal to cap gas prices. What's the latest?
Yes, Francine, and the meeting is now underway. All of the energy ministers of the European Union represented now underway having this meeting, and this is seen really as make or break. Today, it really is a last-ditch effort to get a deal done before the end of the year, and the pressure, Francine, it's immense because the clock is ticking. We have a few days left before the Christmas break, and of course, there's also the political pressure playing into this. European leaders on Thursday last week, when they met here in Brussels, they were very specific and very vocal. This back and forth over the price cap cannot continue. There needs to be a deal today. The price cap has been the biggest sticking point, but we should also stress that this is a comprehensive package that also includes things like joint purchases of gas. So this is Brussels. Nothing is agreed until everything is agreed, and they hope today, or at least the hope is that today will be the day.
So if it comes down to the price point for the price cap, what kind of figure could we actually agree on?
And Francine, bottom line, that is the situation. It comes down to that number because we have been told repeatedly 90% of this package, of this comprehensive market intervention for energy is done. The issue is the price cap. Now, to take everyone back, remember the European Commission came out with an initial proposal set at 275 euros megawatt hour for 2 weeks before this price cap would be triggered. That was seen as too high and not aggressive enough. That number now has been brought down by the Czech presidency, which holds a rotating presidency of the European Union, to 188 euros megawatt hour for 3 days. So the range is big. We have seen significant moves. The question is whether 188 will do the trick for this deal to finally go through the finish line.
Thank you, Maria. Let's also get straight to Oliver Crook. Oliver, what's the situation? I mean, that's the situation in Brussels. There are, of course, direct linkages to where you are. And what are those implications, of course, for Germany?
So the debate in Brussels actually creates a lot of angst here in Germany. As you can see from the ship behind me, the virtue of this ship is that it can accept cargoes from all over the planet, and which is a great thing when you're trying to cut your dependence from Russian gas. However, by that same token, those ships can be rerouted with just a single phone call. So if that cap comes in too low for Germany, the fear is that they will be outbid for what is already an extremely tight market for LNG and a very competitive one. Germany is more dependent on gas than many of its new European neighbors. Plus, it has deep pockets and is willing to spend for that gas. So all of this is creating a lot of anxiety here in Germany, and that is really why they've stood in opposition and been very, very cautious towards any conversation on the gas price cap.
Ollie, thank you so much. Bloomberg's Oliver Crook there in Wilhelmshaven in Germany and Maria Tadeo in Brussels. Now, coming up, we'll also talk to the UK's Shadow Work and Pension Secretary, Jonathan Ashworth. We'll discuss the state of the UK economy, including the barrage of strikes seen this year alone. That's coming up shortly, and this is Bloomberg.
more activity in the fusion world than ever, and not just in government research labs. There's also an emerging private fusion industry that's attracted billions of dollars in capital in recent years.
Governments and private investors alike realise that we've got to find a solution that's going to allow us to get to net zero targets.
This is one of the hardest but most rewarding problems that humanity could work on. Ultimately, we all want the same thing. We want someone to put electricity on the grid from a fusion power station as quickly as possible.
Frankly, the scale of the challenge, 3,000 gigawatts of fossil fuel to replace, there's not many things that can do that. In fact, there may only be fusion that can really do that.
And while many in the scientific community predict fusion power will take decades, some in the private fusion space believe we'll get there in just a few years, as soon as the 2030s.
The top names in business are on Bloomberg.
I think you have to assume that we have some bumpy times ahead, and you have to be a little bit more cautious with your financial resources, with your sizing and the footprint of the organization.
So what can you do near term? Test to make sure you see at the margin you can move things around, manage your expenses very carefully and invest in efficiency and effectiveness, but also continue to spend money where you have competitive advantage.
Nobody covers business like Bloomberg, your global business authority.
You will shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
We have clear signs that demand exceeds supply in our economy and our labor market.
We're going to go until the job is well and truly done, which is 2% on average inflation.
We're going to have to do what's necessary, again, sufficiently restrictive to bring inflation down.
We're going to have to move rates up, ongoing increases from the current rate to above 5% and hold there for some time in order to get inflation back down to 2%. And that's what we're about doing right now.
Fed officials are reiterating the need for higher rates there. Of course, we'll have a full roundup of what markets are expecting. We do have some important data points a little bit later on this week in the U.S., including that Michigan sentiment that is on Friday. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Francine, good morning and thank you. Media reports say the number of COVID deaths in Beijing's funeral homes is surging, raising concerns that China is hiding data on the latest wave of the virus. Staff at a local crematorium told the Financial Times they had seen at least 30 COVID victims. The country of 1.4 billion people says just 11 people have died with the virus over the past month. Now the EU has reached an agreement to expand its flagship carbon market, extending emissions trading to heating, road transport and shipping. Under a provisional deal, the bloc will also accelerate the pace at which some companies are obligated to reduce pollution. Separately, the UK has signed an agreement with the group, including the European Commission, to develop offshore renewable energy projects in the North Sea. Zambia's president says the nation is trying to reach sustainable debt levels without damaging key components of the economy or, quote, rocking the boat. In an interview with Bloomberg TV, he encouraged creditors to reach an agreement as quickly as possible.
We certainly expect progress because that's the way it should be, because there's an understanding that the process will run to a point like where we are now, where we can quickly and work through towards signing a memorandum of understanding. And for us to do that, we have to make progress on the issues around what is the quantum of debt that is sustainable.
Messi has finally added the World Cup to his trophy list as Argentina beat France in a gripping World Cup final. Argentina let a 2-goal lead slip late in the second half, with Messi and Mbappe each going on to score in extra time to make it 3-3. The 4-2 penalty shootout brought France's hopes of retaining the cup to an end, returning it to South America after 36 years of absence. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, these are some of the movers in today's trading session. So we look at individual stocks. First of all, Porsche actually joining Germany's main equity benchmark. This is as they replace the sporting goods maker Puma. Now, Porsche has more or less a market value of around 96 billion euros. It did become Europe's most valuable automaker this year when its market cap even overtook that of the parent company Volkswagen just a few days after the initial public offering in late September. The picture for Porsche today gaining some 4.3%. The other story we're watching out for, and of course this is related to the World Cup because we need to talk about the World Cup and Lionel Messi as much as we can. Wow, what a final. A lot of people tweeting saying, I wish I could watch it back. It was so good. Adidas scrambling to keep up with demand for jerseys featuring the Argentine football star Lionel Messi. That was ahead of the FIFA World Cup final. So I just imagine what the story is like today. And then the other story that we're watching out for is, of course, AstraZeneca. Now, the pharmaceutical giant's drug, Imfinzi, we understand did not achieve a statistically significant overall survival compared to chemotherapy in a key phase 3 trial on patients with lung cancer. And so we're seeing a bit of pressure for AstraZeneca and, of course, a lot of disappointment, I imagine, from a lot of people that are sick right now. But AstraZeneca down 0.4%. So overall, market indices holding strong, gaining some 0.5%. The big story, of course, is what's happening in Japan with the possible hawkish tilt from the Bank of Japan. So we'll have plenty more, of course, on the market action throughout the day. Coming up, we also focus on the UK. The market's cautious as the Fed maintains its hawkish rates outlook. We'll have plenty more on that shortly, and this is Bloomberg.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers Jobs Day like Bloomberg.
Welcome back. Now, these are your top stories today. We, of course, focus on the markets left, right, and center, as we also await for some data out of the U.S. Back to business. China's top leaders will focus on spurring growth in 2023, seeking to revive the economy following 3 years of strict COVID curbs. Asian stocks start the week lower. Breaking the deadlock, EU ministers meet to discuss a gas price cap that's almost a third lower than an original proposal. Plus, the beautiful game, Argentina wins the World Cup after defeating France in a nail-biting final, a dramatic end to a controversial tournament for host Qatar. Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the prospect of further Fed rate hikes triggering a recession is fueling market caution. The dollar fell as investors cut long bets while weighing the Fed's outlook on monetary policy. Well, we're joined by Hannah Smith, Vice President for State Street's ETF business. Hannah, thank you so much for joining us. I mean, we thought that there'd be a bit of a risk reversal, but actually, could we get a Santa rally? If you look at European stocks, they're gaining in today's trading session.
Yeah, definitely. I think there's now some more reassurance that we may have reached peak rates. And so we saw actually last week in the ETF space, we saw 1 billion going into European fixed income. So there's definitely appetite within the space there. And also within emerging markets, we're also seeing appetite there, 750 million inflows into the space. So investors are definitely have a bit more risk appetite.
Yeah, I mean, what do you expect for 2023? Of course, what we saw in the last couple of weeks was a lot of risk aversion because if central banks hike, then it pushes in a recession, which will hurt corporate profits.
Yeah, I think in 2023, we're expecting peak rates to have been reached in most of the developed markets. And then I think that will give us a bit more clarity. Obviously, also the story around China reopening has been quite positive. And so we have seen flows now into emerging markets. I think the catalyst we were waiting for was China reopening and also peak rates. So now we are seeing a greater appetite of investors to maybe take on more risk within their portfolios.
Hannah, is 2023 the year where we're going to see equities move in tandem with bonds?
Well, it's an interesting question. Obviously, 2022 has been unprecedented in terms of the correlation that we've seen with fixed income and equities. But equities are still very expensive. If we look at the PE ratios on the S&P, it's around 17.5, which is above the 20-year highs that we've seen. And so when we're looking at opportunities, equities at the moment aren't screaming great value.
Is there anywhere in the world where they scream, if not great value, some value?
I think emerging markets, their valuations are very attractive as they have been for some time. And what we're now seeing is that, as I mentioned earlier, with this China reopening, it provides further support. So we are seeing investors want to go back in. If we look at the returns last month within emerging markets, it was 12% just within that 1 month, and that's 5 times more than the US and two times more than Europe. So there's definitely opportunity there.
And so, Hannah, in terms of your base case, what happens to dollar? I think I've rarely seen it this split on what market participants say.
Yeah, dollar's interesting. I think we saw it peak in September as the highest level since 2002, but since then it's dropped 9%. So when you look at the dollar, I think that some of the support mechanisms that were holding it up, such as higher rates versus the other economies, as well as China, concerns around China, and also the growth dynamics were really supportive of the dollar. It's likely that we're going to see those come off now within 2023. So I think we'll see kind of less strength supporting the currency.
Okay, we're like Jules Verne. We're going around the world in like 60 seconds. What happens to the UK next year? I mean, we're seeing, there's a month of misery with strikes. We're not 100% sure how we settled on pay. What does it take for investors to come back into certain parts of UK assets?
Yeah, I think the UK is really interesting because the stock market is quite dislocated from what goes on within the economy. And so what we see within the UK is it has high exposure to energy, which has obviously performed relatively well given the supply chain constraints. In addition, it's very defensive. We have high exposure to consumer staples. Also, a lot of companies generate their revenues overseas, so a falling sterling is beneficial. So we have seen it perform relatively well, but as I mentioned, that's not necessarily a reflection of what we're seeing going on within the wider UK economy.
I mean, are there any ETF flows into some of the smaller companies? I guess you'd make a difference between the FTSE 100 and 250, which is much more exposed to domestic issues.
Yeah, definitely. So I think the flows into UK have been quite mixed. I think for the smaller companies, they are a little bit more exposed to what we're seeing within the UK economy. So those flows haven't been as strong as what we've seen in the FTSE 100, for example.
Okay, Yen, I mean, we've been promised a hawkish BOJ for such a long time. Many participants are not believing it, but we're also coming to almost to the end of the Kuroda era.
Yeah, I think Japan, actually, if we look at Japan as a whole, it's actually performed really well. And we're now seeing profit taking within Japanese equities. Obviously, the weaker yen had actually been supportive because a lot of companies generate their revenues overseas. I think 47% of revenues come overseas. So it will be interesting to see how that plays out now that we may not see such a weak yen within the market.
I mean, I've heard this before, that actually yen and the BOJ could be the big story of 2023. But does it have a read across for other nations that either border it or certainly do a lot of trade with it?
I think that when we look at Japan, I think it has been underrated for quite a long time. Japan is always the place which looks undervalued and underowned. And so we have always been quite positive on Japan just because the valuations are attractive, the weak yen has been supportive. But I think it will be interesting to see now how that plays out. And it does feel that investors are starting to like it. We have seen some flows. So I think it's one to watch in 2023 as to how that plays out.
And I know we mentioned also the Fed, but are there any leading indicators that you're watching out for? I know we have University of Michigan on Friday, which I think used to be one of Jay Powell's favorite indicators. But now we have housing. Is there danger that actually the terminal rate that we're expecting for the Fed, which is around 5.25, could shift significantly?
Yeah, I think that's the biggest concern for investors right now. Obviously, we saw weaker inflation data come out of the US, which was positive for the market, as there had been a dislocation so long between expectations and the data that we were seeing. But I think 2023, we're really expecting that we are going to see peak rates, and that is obviously a result of inflation coming under control. So I think it's obviously a leading indicator for the rest of the world, what we see in terms of inflation coming out of the US, and we do expect that will start to turn positive in terms of that connection between the data that we're expecting and also rates that we see from the central banks.
Did you watch the football final yesterday?
Of course.
I mean, commiserations, first of all, to my husband, who's half French, and he will need like 2 weeks to get over it. Yeah. It's amazing when you look at first of all, it was an incredible game. Then you look at, fundamentals in Argentina. I mean, 100% inflation. Like, is there any, read across for...
I don't know. I think it's a great question, and I did see a lot of conversations around the back of that. But I guess maybe now there'll be a bigger focus given the World Cup and people looking at what the policies may be.
Hannah, thank you so much. Hannah Smith, their Vice President for State Street's ETF business, and thank you also for all of your interviews this year. We'll see you in 2023. Now we're just getting some breaking news out of South Africa. The ruling party, the ANC, has re-elected Cyril Ramaphosa as party president. Now, we also look at RAND. Our Valerie Teitel, of course, our markets editor, has her eye on exactly what's happening to RAND, strengthening, I think, some 2.5% on Mr. Ramaphosa being re-elected as ANC president. Coming up, the UK braces for the most disruptive week of strikes yet. Don't miss our exclusive interview with Jonathan Ashworth. He's the UK's Shadow Work and Pension Secretary. That's coming up next, and this is Bloomberg.
A digital-first approach to the future of work is where the industry and all companies will be heading.
Could the future of work not be at home or in the office, but in the metaverse instead?
There's that word, metaverse.
Doing well. How are you doing?
When I think about the metaverse, I think about immersive experiences that have a sense of active presence.
Wow, look at this. This is me. The metaverse is projected to become over $1 trillion market by the end of this decade. And whether you know it or not, you'll probably be working there in the future.
We're moving into a world where we're going to be interacting with computers with our bodies.
This is definitely trippy.
I think the adoption curve is going to be slow.
It's weird.
Like a weird floaty thing right now.
Oh, look at you. You have no legs.
It's kind of a fun world, and we're just at the very beginning of a very long journey.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, let's focus on the UK, and of course, Britain's bracing for the most disruptive week of industrial action yet. Nurses, ambulance workers, postal staff, and border guards are all striking this week, with millions of people's Christmas travel plans set to be thrown into disarray by another round of railway walkouts. It adds to the headache for the UK labour market, which has lost more than 500,000 people since the start of the pandemic. Well, joining us now is Bloomberg's UK correspondent, Lizzie Burden, and we're also joined by a great guest. But Lizzie, I mean, the problem is basically the missing workers.
It is, and this is really the big question mark in the UK economy. It's consequential because employers are having to dangle bigger wage packets to bring in the staff. That's pushing into the double-digit inflation, but workers aren't benefiting from the pay growth. Now, there's been a list of reasons suggested for why these workers are missing: pandemic savings, long COVID, NHS backlogs, and a new reason was suggested by the Treasury Select Committee last week in a cross-party report. They said that because all the cost of living benefits were rushed out, inadvertently they might be disincentivizing work. Now, the Work and Pension Secretary Mel Stride is looking into this in his Stride review on labour market inactivity. I want to know what the opposition Labour Party's view is on this. So we're joined now by Jonathan Ashworth, Labour's Shadow Work and Pension Secretary. Jonathan, thanks so much for being with us. What I really want to know is, do you agree with the Treasury Select Committee Chair Harriet Baldwin that there are people who can work but are choosing not to?
There are definitely more people in this country who can work. We've got employment at a lower level than it was pre-pandemic, and I think out of the G7 countries, we're one of the few to have regained our pre-pandemic employment rates. And when you drill down into the data, we've got 2.5 million out of work for reasons of long-term sickness. That's a 20-year high in the United Kingdom. We've got this great silver exodus, if you like, of the over 50s who have left the labour market. And of some of the people who are short-term unemployed, looking for work on universal credit, because the Treasury Select Committee is correct in as much as there'll be some who are getting the cost of living payment, yet if they go £1 over the threshold, they'll lose a significant amount because of the cost of living payment. But that is a temporary phenomenon, because the cost of living payments will not last forever. What are some of the more significant barriers to moving into work are the huge cost of childcare in this country, housing costs, transport links, but also our employment support regime through our job centres is not giving people the coaching, the retraining opportunities, the detailed personalised support that it really needs to do. And that is something that I am focused on, and I want to reform the system.
Well, economists say that one of the reasons for labour market inactivity in the UK is Brexit. Your leader says that he wants to be the party of business, that Labour's all about growth. Would you have softer ties on EU migration?
No, we're not proposing to change that. We would have a points-based system for immigration. But look at the data. There's 1.7 million people who say they are inactive, but who would want to go back to work, according to the ONS survey. Plus, we've got 1.2 million people short-term unemployed. So that's a pool of 3 million people who want to work in this country but are not getting the right levels of support to return to the labour market. We've got to change that.
It's unclear to me, actually, why that is. Is this long-term sickness because it's NHS waiting lists?
Yeah.
Is this because it's long COVID? And actually, will the cost of living crisis entice people back sooner than maybe they should?
Well, that's a really great question. So when you drill down into the data, there is no question that the 7 million on the waiting list, the 400,000 waiting beyond a year for treatment, whether that's a knee operation, a shoulder operation, that is definitely pushing some of the over 50s out of the labour market. A growing burden of it is also mental health conditions and people not able to get the right levels of support. But here's the thing, there have been pilot projects across the country where we've put employment advisors in mental health services, and it's actually helped people return to work. And one of the things that I would do if I was the Secretary of State is that rather than trying to fix all this from behind my desk in Whitehall, I would devolve budgets to local areas and ask local areas to work closely with the NHS, work closely with local services to give people support.
Would you give nurses a pay rise?
Well,
that most people say they...
We've got to negotiate, or the government has to negotiate with nurses. The nurses, look, the strikes, the industrial action we're seeing in the United Kingdom is a symptom of 12 years of mediocre growth, of failing to make our economy more productive. It's why wages have been squeezed. People were better off in real terms under the last Labour government, which we weren't in government since 2010. So these symptoms are a reflection of that. We've now got inflation running at 10%, which means the cost of everything is going up, as you know. And that's why nurses are taking industrial action. But it's incumbent upon Rishi Sunak and his team of ministers to negotiate with those NHS staff to find a resolution, because we don't want to see these strikes go ahead this week.
Well, so it's not just the silver exodus of older people leaving the workforce, it's also 16 to 35-year-olds. We're in a cost of living crisis. What bigger incentive could you possibly have to get into work other than the need to survive?
Well, I mean, I think being in work is important anyway. It's important for your sense of well-being. I think it's important for your contribution that you can make to society and the sense of inclusiveness in society. But it's got to be in your economic interests as well. And for many, it isn't. And that's because wages have been squeezed. It's because things like childcare is so expensive. Many people find that they would be worse off because of childcare costs. That is absolute madness. But there's also people who can't return to work because they have caring responsibilities beyond children. Many of these over 50s are now caring for a partner or a mum or a dad who've got Alzheimer's or had a stroke. And if they had flexible work options, they would return to work.
But how do you square that circle? So if it's childcare that you need, do you not need to increase immigration so that you have some kind of child support system?
Well, we need to increase childcare provision. So one of the policies that Labour have announced is that we would open breakfast clubs across the country so parents can drop their children off at 8 o'clock and then get to work. We don't have a cohesive childcare service in this country. In fact, and the costs of childcare, for some people, childcare costs more than rent. That's absolute madness, and it prohibits people from returning to the labour market.
Jonathan, just going back to the strikes, if I'm a public sector worker, if I'm a nurse, and Labour, the party of unions, supposedly won't commit to an inflation-busting pay rise, what's the point of voting for you?
Because we want to negotiate with NHS staff, and we've got nothing but praise for staff. I mean, they got us through our darkest days since the war, but we would negotiate, and we would give a fair pay settlement to NHS staff through negotiation. But we'd do other things as well. No, NHS staff have been working with their fingers to the bone. They're absolutely exhausted because there's so few of them. We're short of around 40,000 nurses and midwives. So one of the things that we have said we would do is get rid of the non-dom tax status and use the proceeds from that tax change to expand places so we've got more nurses, more midwives, more paramedics in the NHS.
Yeah, but on the pay, would you give them what they're asking for?
No, but we would negotiate. I mean, we've said, Wes Streeting, our Shadow Health Secretary, said 19% is unaffordable, but we would sit down and have a serious negotiation. And negotiation...
But inflation, I understand, but inflation is so high, right? And we talk about this every day. At some point, if they ask for an increase, leave everything else to one side, would you give them that money?
We would negotiate. It has to be through negotiation. And negotiation just isn't about pay rates. It's also about terms and conditions. It's also about safe staffing arrangements. So these are the things that should be brought to the table, and we would engage in a meaningful negotiation on those fronts.
All right, Jonathan Ashworth, thank you so much, the UK's Shadow Work and Pension Secretary, and of course, thank you to Lizzie Burden, who brought us this great interview. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Sam Bankman-Fried is said to be planning to drop his fight against extradition to the US. Sources tell Bloomberg that the disgraced FTX co-founder is expected to tell a court this week that he won't fight the request. He's currently being held in a prison in the Bahamas. He denies knowingly committing fraud or breaking the law. Elon Musk is asking users whether he should step down from running Twitter. With 2 hours left and some 15 million votes cast, 57% of participants in the online vote have so far said that he should. The billionaire owner of Twitter says he will abide by the results of the poll. Over the past week, Musk has come under fire for banning multiple accounts, including those of some prominent journalists. China's top leaders say they plan to focus on boosting the economy next year, hinting at business-friendly policies. At the Central Economic Work Conference, Xi and other senior officials pledged to revive consumption and support the private sector, a marked shift from recent years. Economists say policymakers are likely to target GDP growth of at least 5% in 2023. Intel will reportedly delay construction of its planned German chip plant in a blow to Europe's semiconductor ambitions. Local media reports that Intel is seeking more government subsidies as costs for the mega plant in Magdeburg have jumped to 20 billion euros. The chipmaker says much has changed since first announcing plans for the plant, which was actually earlier this year. And that's your Bloomberg Business Flash. Francine.
Leanne, thanks so much. Coming up, Magic Messi, we discuss Argentina's win at the World Cup final and what the tournament means for host nation Qatar. That's coming up next, and this is Bloomberg.
There is an epic saying in Italy when it comes to family generations that the first generation creates, the second generation expands, and the third generation destroys. And that's almost what happened in the Gucci story.
So hate and love together. Now I would have a much more experience about those who says I love you and then destroy you.
The Gucci family was the strength, but also the weakness of the label.
The situation became dire with Gucci's finances. They were not able to pay salaries. They were not able to pay suppliers. Gucci's really teetering on the brink at this stage.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, we're just getting some breaking news out of South Africa. South Africa's ANC ruling party has re-elected Cyril Ramaphosa as party president. It's also elected Mr. Mashatile as a party deputy president. Of course, he was on this very program just 2 weeks ago supporting President Ramaphosa. On to other things, and Qatar, Lionel Messi has finally added the World Cup to his trophy list after Argentina beat France on penalties in one of the greatest finals in the tournament's history. Now joining us now is Bloomberg's Simone Foxman in Doha. Simone, you were at the final. I can't even begin to imagine the level of excitement that was in the stadium. What was it like?
It was really thrilling, Francine. It was certainly my first World Cup final, and everyone on the edge of their seat when France was coming back and looked like it would make up that 2-0 deficit, and then going into extra time and finally penalty kicks. The vast majority of the fans were Argentine supporters. They were very loud through the duration of the tournament, and many of them were wearing that blue and white shirt manufactured by Adidas, for which the company says it is in very low stock around the world.
So you wrote this morning that this World Cup stands the risk of turning Doha into the Gulf's, well, one of the most conspicuous white elephants. What do you mean by that?
Well, the country has invested more than $300 billion, according to Bloomberg intelligence analysts, in trying to build infrastructure, a new metro system, expanding its airport and the like, to try and boost the non-oil economy. But what the concern is now is that there were already residential and office buildings that were empty ahead of this World Cup. There are going to be 14,000 to 15,000 new hotel rooms in the market, and occupancy rates were sitting below 60%. So what a lot of the analysts and investors that I've spoken to say is the government is going to need to do something. Either they're going to need to put more money into the non-oil economy, or they're going to need to change their laws in order to try and encourage tourists, businesses to come here on a more regular basis, to try and bring more people here, because otherwise the population is going to decline. And money alone is not enough to get people in hotel rooms, in buildings, and running their businesses from Qatar.
Thank you so much. Of course, that was our Simone Foxman in Doha. Now, that is it for the Bloomberg Surveillance Early Edition. We have Anna Edwards in New York, Danny Berger in London. They'll have a full roundup of what exactly is going on in the markets. This is Bloomberg.
Somebody says, I want to be, and a person has an impact on society, what would you recommend that somebody do to train themselves and to work their way up to be somebody that's impactful on society?
Well, I think the first thing you've got to believe in something that you really care about. I've been fortunate that over the course of my career, I've come up with things that have mattered to me, and I've pursued them. The best advice I ever got was from Mike Bloomberg. And he said to me at one point, he said, show me somebody who's never lost, and I'll show you a loser. And I believe that if you believe in something, go after it, take risk. Obviously, they should be smart risks, but they should be around things that you really care about.
So you would see your legacy as being actually target ALS and helping to moderate the impact of ALS, if not curing it.
That's my final legacy. I'm proud of some of the other stuff that I've done as well. Transformation of New York after 9/11. I'm also incredibly proud of a lot of the companies we created at Sidewalk, but I feel like I've done a lot.
Multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question.
Best question I get all night.
Bloomberg. Top experts. Great questions.
Right now, we're trying to move our policy in the way to get back to price stability, but in a way that minimizes the pain of the journey.
We're going to go until the job is well and truly done, which is 2% on average inflation.
I am getting increasingly confident that we're getting closer to that point, but obviously we have to watch the data.
This is Bloomberg Surveillance, Early Edition with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. Coping with COVID, China looks to jumpstart an economy battered by COVID zero restrictions. Meanwhile, there's suspicion that Beijing is hiding the real number of deaths from the latest outbreak. Millions respond after Elon Musk asked Twitter users whether he should step down as CEO. Most of them say he should. And euphoria in Argentina, a country battered by sky-high inflation and political uncertainty, celebrates a World Cup victory for the ages. Welcome to Bloomberg Surveillance Early Edition. I'm Danny Berger in London with Anna Edwards in New York this week. Both Matt Miller and Kaylee Lines will be hosting the U.S. Close show later today, so they are off. Anna, there's some wonderful irony to the fact that I, the American, am still here in London, and you've traveled to New York, to the land of soccer, but maybe this just means you and I will be less distracted by football this morning.
Yeah, just maybe, Danny. Very good to see you here from New York. Yeah, I'm here for some pre-holiday cheer. I think that's the reason I'm going with for my visit. Danny, let's have a look at what's been going on through the Asia session then and into the US session, set you up for the trading day ahead. This is what we see through Asia. MSCI Asia Pacific under some pressure, cautious trading through the Asia session, down by 0.2%. We have the Chinese equity market here, the CSI 300, down 1.5%. We've got a renewed focus on the economy from the Chinese, that economic conference taking place over the weekend, but that not enough to counter the gloom and concern around COVID cases rising and possibly death counts as well. So that particular index down by 1.5%. Then we come to the Japanese assets, Danny. We've got the Japanese 5-year yield in here. We have the yield going higher, and the dollar has, the yen, sorry, has been actually quite volatile in this morning's session as we've been pricing in the ebb and flow of a particular story around the yield curve in Japan and the BOJ, the relationship between the government and monetary policy. Will there be more flexibility from the government for monetary policy to be conducted differently? Does that mean any kind of step away from yield curve control? That's what the market was assuming after it saw reports that suggested that, but then government officials pouring a little bit of cold water on those reports, but we've still seen quite a bit of movement in Japanese assets in the meantime. Let's have a look at where we are on the US picture then. US futures point a little higher, but this after a lot of focus on negativity last week, and this despite the fact that we got that inflation print out of the US coming in better than had been anticipated, running lower on inflation, but still the Fed story dominates, the ECB story, the global central banking story dominates, and that put pressure on equities at the end of last week. We looked to bounce a little bit on that this morning, up by 0.3%. Still a few hours to go until the start of US trade, of course. This is the yield on the US 10-year. Will it be a year for bonds next year? We'll get into that conversation a little bit later on. Given if we are going to be dominated by recession fears, how good might that be for fixed income? This is the
WTI price, $74.90. A focus on the SPR, the US wanting to refill the Strategic Petroleum Reserve. That's part of the conversation. Also a focus on the Chinese growth narrative as well. And we've got the Binance coin in here, Danny. Normally Matt talks about Bitcoin, but we put the Binance coin in because there's been some reporting over the last few days that perhaps this coin bouncing a little bit, and maybe that underscores a little bit of reprieve for the crypto sector after the drama that, of course, we saw on FTX. Danny, what do you see on the Europe story this morning?
I got to say it's similar to what you saw in American stocks, Anna, but I'm just not sure how much we can really trust this rally, how much we can read into it. Essentially, every single index in Western Europe is heading higher this morning. Nearly every sector is also moving higher. It's led by energy. Should be no surprise considering, Anna, that oil price you were just showing. Energy stocks moving higher by about 2.5%. But again, it is the end of the year. There's often weird rebalancing things happening at the end of the year. And last week was just so negative, the worst week for European stocks since November, after that very hawkish Christine Lagarde and the rest of the ECB. So on a headline basis, we're up about 0.5% for the Euro Stoxx 600, and yields are moving even higher in Europe than they are in the US. It is a clear underperformance that started with the ECB meeting last week and continues today. German 10-year yields, those are up by 4 basis points. On the front end of the curve, German yields are the highest since 2008. Now, that shrinking differential between European bonds and US bond yields means that we're getting support to the euro generally. It's a down day for the dollar, but the euro versus the dollar is appreciating about 0.4%. We're currently at 106.26. The other currency to track is the South African rand. That's also advancing against the dollar. This is not just a dollar week story where the dollar is declining by about 2.33%. The ANC has re-elected Cyril Ramaphosa to head their party. They're, of course, the ruling party currently of South Africa. There was a lot of concern about whether Cyril Ramaphosa would stay around, considering there was this scandal about the theft of stolen money in a couch. A very odd story, but investors might be comforted by the fact, Anna, that Cyril Ramaphosa, at least for now, is sticking around and can continue to chase his reforms.
Okay, we'll certainly focus in on that. Let's get back to the Chinese growth story then, Danny. Starting in China, the government says it will focus on boosting the economy next year. At the Communist Party's annual Central Economic Work Conference, China's President Xi Jinping and other senior officials hinted at business-friendly policies and further support for the property market, while likely scaling back fiscal stimulus. Bloomberg's James Mager joins us now in Beijing for more. And let's focus on the things we've heard from the work conference then, James, and a focus on the economy. How substantial is this?
Yeah, the Chinese economy did not do well this year. Exports are now falling. Domestic consumption is very weak. The property market has slumped now for more than 15 months. And so this renewed focus on the domestic economy is really what is needed. The government is saying that they're looking to boost private spending. They're looking to obviously help housing developers and help the housing market. And they're also looking to pull back on some of the over-regulation of the tech sector, which had really damaged not only the value of the tech companies, but also a lot of those companies are shedding jobs. So these are sort of the sounds, or these are the sort of the comments that people were looking for from the conference on the policies going forward next year, or what they could hope to see when the actual details of those policies are announced in March. I mean, the question now is, how effective is that going to be? Can the government really boost private consumption without massive injections of income support for Chinese people who've seen their incomes damaged quite substantially over the last few years because of the lockdowns, because of the slump in various the services sector and other parts of the economy. It's unclear whether the government can turn that around quickly in 2023.
James, there also seems to be some skepticism about numbers of COVID in China, be it cases or deaths themselves. China still hasn't recorded a death from COVID since December 4th, despite reports of hospitals filling up. How should we be thinking about these figures from these COVID reports coming from China?
Well, that's changed a little bit. They reported 2 whole deaths over the weekend, which just underscores the point you're making, that the numbers that they're reporting about cases and the numbers they're reporting about deaths are completely out of proportion to where they should be, considering the size of the outbreak. Obviously, cases it relies on testing. China is no longer testing like it was, and that's what happened in many other countries. As people move from PCR testing to the rapid antigen tests, they don't report those, and so testing numbers, case numbers, obviously have no relation to the outbreak. But we should be seeing hundreds of deaths now, considering the numbers of cases that are happening in Beijing and other cities, and that's just not the case. Now, whether that's a concerted effort by the government to downplay and cover up those deaths so that people aren't afraid of the outbreak, whether that's doctors who are overwhelmed and are just putting down, pneumonia on a death certificate instead of assigning it to COVID, or what the reason for that is, the numbers that you're seeing out of China on the very, very limited numbers of deaths are just unbelievable. If you look at the population of Australia, it's about the same size as Beijing. And when Australia reopened from COVID-0 in 2021, you saw hundreds of deaths a day at some point. Whereas, as I just said, you saw 2 deaths over the weekend. You've only had 2 deaths in Beijing in the last 3 weeks. That's just unbelievable.
Okay, James, thank you very much. That's Bloomberg's James Mager reporting from Beijing. Now, from China, let's talk about the tech story. And Elon Musk is asking Twitter users whether he should step down as CEO of the social media site. Millions of votes have been cast in the poll. About 57% of those so far say Musk should quit. He's been under fire for a number of policy changes at Twitter. Alex Webb of Bloomberg Quick Take joins us now for more. And of course, Alex, he followed up that poll by basically saying no one wants the job who can actually keep Twitter alive. Well, what's the actual likelihood that Musk would step down?
I think if he says he's going to, it seems there's a good chance he will. He's been made lots of comments like, be careful what you wish for. I suspect that it's not the whole story. Don't forget, this follows off the back of several things that happened last week. Firstly, Tesla had its worst week in I think 2-3 years. It lost, just in the course of the week, 16% of its market capitalization. He's at the same time seeking new investors in Twitter. So you wonder whether there's some, this is all speculation, of course, there's some external pressures here, whether the independent directors, such as independent as they are, at Tesla are sort of saying, please don't be as distracted as you are right now. Secondly, whether he's going out seeking new investors, and those investors are saying, we will not invest in it if you are CEO.
Or perhaps the Qataris, where he was over the weekend.
It's a distinct possibility. He was in Qatar, photographed in a box at the football World Cup final with Jared Kushner, interestingly enough. So lots of conversations, presumably, that he's having with other people. It has happened in the past where he has put stuff out to a poll, and then it's subsequently been reported that this was already a decision he had taken.
Yeah, it does seem an incredible way to run a business, to ask Twitter followers to decide these things, really, doesn't it? I mean, in terms of normal business practice. Do you get a sense, then, this is really about Tesla, Alex, and the fact that he's been so distracted by other things, and we've all seen what's happened to Tesla's share price?
I mean, I don't think it's any one factor. That is probably one of a raft of other factors. Tesla is down significantly since he took over at Twitter, I think in the order of 40%, while the market remains broadly flat. That is, of course, the source of, the majority of his wealth. So any troubles that Tesla has subsequently will affect his ability to continue funding Twitter if, the value of his equity stake there is diminished. So, it is a big consideration. Don't forget, though, Twitter is losing a huge number of advertisers. One has to wonder whether, therefore, others who invest in Twitter, because he might in name be the owner, but there are plenty of other interested parties there, whether they're starting to ask these questions too.
And you just wonder whether other businesses that maybe haven't decided they'll quit their advertising platform, how they would view such a move to ask Twitter users whether the boss should resign. Seems quite incredible. Bloomberg's Alex Webb, thank you very much for the update on the Twitter story. Now, World Cup fever is over, at least for another 4 years. Lionel Messi finally adding the World Cup to his trophy list. It's a long trophy list, of course. Argentina beat France on penalties in one of the greatest finals in the tournament's history. Joining us now is Simone Foxman in Doha. Well, it certainly wasn't boring, Simone. I saw Argentina fans and France fans out in force here in New York yesterday. You were at the final itself. You were there on the ground. What was the atmosphere like?
I was, and it was thrilling. However, here there were mostly Argentina fans. They seemed like they were everywhere, the blue and white. And there were just a small contingent of French fans that came out after we saw Mbappe even up the score really at the end of regular time. And they continued to be there into extra time. But it was absolutely thrilling. We couldn't see which way things would go. And of course, Qatar couldn't have asked for a better spectacle to end this World Cup, which has had thrilling upsets. A lot of teams come through that weren't necessarily expected to do so well. So certainly lots of fans cheering as they exited the stadium yesterday.
I gotta say, it's pretty impressive, all the Argentina fans there, considering I don't think you can get to Doha directly, and it's gotta be more than double the time it takes to fly there than it would from France. Look, Simone, this has been a World Cup that has been mired in lots of controversy. It ends on a high note here with the very captivating final match. What will the legacy of this World Cup be?
Well, one of the interesting ways we're going to determine this legacy is whether or not the $300 billion in investments that Qatar has made into building infrastructure, whether it be a new metro system or expanding its airport, whether those $300 billion are going to truly kickstart the next phase of its non-oil economic growth. Yes, it gets a lot of money from LNG, and it's going to continue to do so, but can it continue to bring businesses and tourists here? From our reporting, that's not so clear. That said, for the rest of the world and fans elsewhere outside of those traditional pockets of real football stalwarts in Northern Europe or in Latin America, certainly the Arab viewers, the African viewers, even the U.S. viewers, which were out in force, have become a lot more important to this World Cup story. That's something that's likely to benefit Fox Sports, which saw some record viewers for certain of its games. And then finally, the point I want to make, as you referred to controversies, Danny, is human rights activists not necessarily unhappy with the way things went over the last couple of weeks, with the focus really back on the pitch. They hope that this is a baseline for future criticism around human rights and other sporting events and social issues, and that we're just going to see more of that in sporting events, including the World Cup going forward.
Yeah, it's certainly shone a spotlight, hasn't it, Simone? Thank you very much. Thanks to Simone Foxman with her coverage of many angles on that World Cup story in the last few weeks. Now we'll look at some of the stocks that are moving pre-market in the United States. So ahead of the session, Tesla on the move, up by 4.7%. Here's the link between Twitter and Tesla, of course, as Twitter CEO Elon Musk polls Twitter users, asks them, should he stay on as CEO? Well, what does that do to investors in Tesla? Well, it looks as if they're a little more optimistic that they might get the attention of the big guy, because that stock up by 4.7%. Novavax, the biotech business, is in focus as well. The company receiving an expanded recommendation for COVID-19 vaccines in Germany, the stock up 1.6%, but that in the context of some heavy selling just last week, where we got a capital hike from the business and also a UK vaccine supply cut. Onto Amazon, that's another pre-market mover. Amazon hit with strike campaigns in Germany days before Christmas. The Verdi union over in Germany calling on its members to take strike action. Of course, this is an increasingly, Danny, unionized business in various parts of the world.
Yeah, and just really in general, more of Europe facing strikes, the UK, of course, facing strikes, potentially in ground traffic controllers as well around the holiday season. Anna, I hope you're able to get home. All right, but first, coming up on the program, we're going to be speaking with Ben Gutteridge, Investco Director of Model Portfolio Services, about a very tough end to the year and what he sees coming for 2023. We're also going to talk crypto. Tim Grant is joining, head of EMEA at Galaxy Digital, plus a bruising blow to San Francisco, how tech layoffs and remote work are colliding to reshape the future of the city. Read more of today's Big Take online or on the Bloomberg terminal. This is Bloomberg.
When I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it.
You gotta think about a person that was homeless at one point, didn't really have any money coming in,
The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
Welcome to the world of decentralized finance.
I'm going to take a look right here at regulation.
We are seeing digital currencies under some pressure.
Bloomberg's covering all things crypto. The people.
I want to have some of my money outside of the sovereign.
The transactions.
This is a simple case of where did the money go?
And the technology.
If people wish to invest in it, they must be prepared to lose their money.
I am still very positive on real utility into this space.
Bloomberg Crypto, Tuesdays.
This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London with Anna Edwards in New York. Now, it has been a strange end to this year. In what some have hoped might be a Santa rally, it has really not come to fruition at all. Now, I want to show you a chart for radio listening audiences. It is an extremely simple one. It is about 2 years worth of the S&P 500 with a resistance line. And this is an index which has really struggled to break above it. It might have rallied through September into December, but so far this month, it has been falling. Now, does this portend anything for 2023? Joining us to help answer that is Simon White, Bloomberg macro strategist. And Simon, I know the end of the year, a lot of weird stuff goes on, a lot of rebalancing, what have you. But is it telling at all that stocks have struggled to hold on to any rally, be it bear market rally otherwise?
Yeah, I mean, I think there's a number of really formidable headwinds that stocks have to face. Now, this quarter is actually okay. We're up 7% in the quarter. Seasonally, the last quarter is often the best, but obviously the 3 quarters preceding that were terrible for stocks. I don't think it sets a precedent for next year. You've got 3 kind of major headwinds. You've got continuing slowdown in global growth. That's very bad for US earnings. You have continued people coming out of stocks and going into cash. So if you look at stock allocations versus cash allocations. And finally, most importantly, the liquidity backdrop is terrible for stocks right now. So combination of central banks are continuing to tighten. You have inflation is still elevated and growth, it will slow, but it's still relatively high. It means that the excess liquidity in the system is still very low, and it's very difficult for stocks to rally with that backdrop in a sustainable way.
And Simon, when we're looking for clues about global growth, you focus in on Korean exports, often cited as a good barometer. What is the message that they give you?
So they're continuing to fall. So if you look at the growth rate of South Korean exports, they have basically collapsed. And they're a very good barometer because South Korea is a small, open trading economy. And so it's very kind of sensitive to the kind of like the global cross currents. And you see a very clear relationship. When you see things like South Korean exports falling, US earnings tend to do badly. And obviously with US earnings and price earnings ratios as well remaining low, it's very difficult backdrop for equities to really have a sustainable rally.
Simon, thanks very much. Thanks for your time. Simon White joining us there with the latest on the markets, his view for stocks in 2023. And for more market analysis, check out the Markets Live blog. MLIV Go is the function to use on your Bloomberg terminal to keep track of the thoughts of the Markets Live team. This is Bloomberg.
watching and says, I want to be Ari Emanuel when I grow up? What should somebody do to get into the talent agency business or the business you're in?
Well, it's hopefully what I've taught my kids. You got to be intellectually curious. You got to be, you got to show up. And you know this like I know this. I got on a lot of planes. You just, even though that voice in your head is saying, oh God, I'm so tired, I don't want to do this. You got to show up. You got to be charmingly relentless. You have to build emotional endurance, because there's no straight line to success. It's kind of all over the place, and you have to just be able to work through those things. And then I think one of the things that I do every week is I try to create serendipity.
The top names in business are on Bloomberg.
I think you have to assume that we have some bumpy times ahead, and you have to be a little bit more cautious with your financial resources, with your sizing and the footprint of the organization.
So what can you do near term? Test to make sure you see at the margin you can move things around, manage your expenses very carefully and invest in efficiency and effectiveness, but also continue to spend money where you have competitive advantage.
Nobody covers business like Bloomberg, your global business authority.
Bloomberg Surveillance Early Edition. I'm Anna Edwards in New York with Danny Berger in London. Now, keeping you up to date with news from around the world, here's the first word. A crucial vote today in the House January 6th committee. Members will decide whether to recommend that former President Trump be prosecuted for obstructing a government proceeding and conspiracy to defraud the U.S. Bloomberg's learned the panel is also considering a charge of insurrection. The British Prime Minister Rishi Sunak will announce a major new artillery package for Ukraine today. The UK will supply hundreds of thousands of rounds of artillery ammunition next year. Sunak will be in Latvia to discuss Ukraine with his Nordic, Baltic and Dutch counterparts. Bloomberg's learned that FTX co-founder Sam Bankman-Fried plans to drop his fight against extradition to the United States. He's been locked up in the Bahamas since last Monday when he was arrested at the request of U.S. authorities. Bankman-Fried has been accused of fraud and other crimes. Danny.
Well, Anna, coming up, we're going to discuss whether or not this market can put the FTX drama behind it, or if there's more pain to come. We're going to be speaking with Tim Grant, head of EMEA at Galaxy Digital. This is Bloomberg.
The standard way venture firms work is you commit capital, let's say over a 5-year investment period, something like that.
Yeah, exactly. Right.
And then the fund just typically lasts maybe 10 years or so.
15. Well, these days longer. So often 15. Often the tail extends out to 20 years because these companies take a long time to develop.
And somebody that invests in a venture fund today should be trying to get rates of return of 20%, would you say, or more?
You know, top-end venture is sort of 3x net of fees. You know, ideally you're hoping for more than that. You're hoping for 5x or more. You know, you're illiquid the entire time, right? So you would hope to get paid for the liquidity.
And today...
So yeah, maybe 20 to 40% if things go well is sort of baseline.
Let's take another subject. Let's suppose somebody says, I don't want to invest in Andreessen Horowitz. I want to be Mark Andreessen. How does somebody become a venture capitalist? What are the skill sets for good venture capitalists? There's a high degree of intelligence, hard work, a lot of luck, dress the right part, don't wear a tie. What are the things that make one a good venture capitalist?
So the highly successful VCs historically are very idiosyncratic. You have people from very different backgrounds. Mike Morris is a former newspaper reporter. John Doerr is a former chip salesman. You've got people with very different. Jim Breyer has more of this kind of blue chip investment background. You have people with very different backgrounds and experiences. And so I think it's some set of skills and some set of knowledge, and then there seems to be a taste component to it that's really hard to measure and really hard to predict.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets. China open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power.
This is Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Coping with COVID. China looks to jumpstart an economy battered by COVID-0 restrictions. Meanwhile, there's suspicion that Beijing is hiding the real number of deaths from the latest outbreak. Millions respond after Elon Musk asked Twitter users whether he should step down as CEO. Most of them say he should. And euphoria in Argentina. A country battered by sky-high inflation and political uncertainty celebrates a World Cup victory for the ages. Welcome to Bloomberg Surveillance Early Edition. I'm Danny Berger in London with Anna Edwards in New York this week. Matt Miller is off today and Kaylee Lyons, she's in, but she's going to be hosting the U.S. Close Show later today, so we're letting her sleep in a bit. Anna, no rest for the weary in this market. Yes, equities in the U.S. and Europe might be moving higher, but it's hard to know how much to read into them, just given it is the run-up to Christmas and the rest of the holidays.
Yeah, it was such a busy week last week, wasn't it, Danny? And so a lot of questions now about how much volume we'll have as we run towards the holidays and towards the end of the year. Of course, interesting and strange things can happen during low periods of volume, so we certainly don't take our eyes off the market. For the moment, then, this is what we see on S&P futures, up by 0.5%. Last week was really intensely negative by the end of the week, really spooked by, well, Christine Lagarde perhaps rather than Jay Powell, but a focus on central bank tightening, certainly front and center for investors. Perhaps they've been wrong-footed into expecting too much from that Fed pivot or central bank pivot earlier on in the week, and so as a result we saw weakness. So we look to bounce a little bit from that. What does the year ahead hold for bonds? A big conversation in markets right now. This year has been bad for stocks, bad for bonds. Will next year be better for bonds if we're focused increasingly on recession fears? We've got the WTI price at $74.89. This in focus because the U.S. committing to buying up more crude for its strategic petroleum reserve. Also the China story in the mix here. China saying at its work council over the weekend it will focus in on growth. That didn't boost Chinese stocks, but maybe adding a little bit to demand for crude. And we've got Binance Coin in here as well. We often talk about Bitcoin on the program, but we thought we'd put Binance Coin in after this particular coin has seen a couple of days of strength, up around 6% or so, maybe more than that now, in the last two trading sessions. So Binance Coin looking to turn a corner perhaps from some of the volatility we've seen in crypto and the selling of crypto assets since the FTX scandal. More on that shortly in the program. Let me show you what's happening in the movers then. Pre-market here in the US, Tesla is up by 4.6%. So if the boss of your business has been incredibly distracted doing something else, and by that I mean Twitter over recent weeks, then no surprise if he asks Twitter, should he stay or should he go? If Twitter users are leaning towards him going, no surprise that perhaps puts some upward pressure on the Tesla share price. Will they get Elon Musk's full and undivided attention? Well, at least a fuller attention. Novavax, the biotech business, that stock up by 0.7%. There's been some focus on, most recently, on what's going on in the UK and the capital raise. That was last week's story. Today, a focus on what's been going on in Germany, an expanded recommendation for the COVID-19 vaccine there, and Amazon in focus, not moving all that much, but a focus on unionization. And as we head towards a European sort of winter of discontent when it comes to the level of strike activity, this ties in with that story. Amazon hit with a strike campaign in Germany just days before the holidays then, Danny. We'll have to see where this one ends, but increasingly unionized, the Amazon business on both sides of the Atlantic.
Well, Anna, here in Europe, it's really all about energy, much like you were showing in the U.S. On a headline benchmark level, we are higher by about 0.7%. But underneath the surface, there isn't too much movement except for energy stocks. Those, as a sector, are up by more than 2.5%, just because perhaps oil is doing better today with China's new economic goals, with the U.S. refilling their SPR. But otherwise, it's continuing to be a story of a bond market sell-off in Europe. Europe is still underperforming that of the U.S. In Germany, 10-year yields are up by 3.5 basis points. Front end of the curve not moving too much, but it's still hanging around the highest level since 2008. It's that hawkishness coming from Christine Lagarde and the rest of the ECB policy members. They're just saying that we need to keep moving higher, more 50 basis point hikes. Get a pivot out of your mind. The market is listening. They are pricing that in. Now, that is also helping the euro. The euro is strengthening versus the dollar. The dollar is down most of G10 currencies today. But again, it's that shrinking in the spread between European bonds and the U.S. that is giving the lift to the euro. Also, getting a lift versus the dollar is the South African rand. It's appreciating versus the dollar by about 2.5%. The ANC, the ruling party in South Africa, has re-elected Cyril Ramaphosa as their leader. There was some question as to whether that would happen. There was some question as to whether Ramaphosa would step down over a scandal that erupted from some stolen money that hadn't been reported. But with him firmly getting that re-election, yes, a countrywide election is coming in the coming years, and I think that there's some more positivity from investors that perhaps this clears the way for him to continue to pursue his reform policies.
Yeah, interesting story, a fascinating story, in fact, Danny. And you mentioned what's going on with the dollar. I should also mention that the dollar against the yen is an interesting one to watch as well. Up by 0.4% on the Japanese currency as a result of a lot of speculation as to whether we'll see a change in the yield curve control policy coming through in Japan. We've got a BOJ meeting this week. So as we work towards the end of the year, that could be a focus for market attention. Let's get into a conversation about markets then now with Ben Gutteridge, Director of Model Portfolio Services for Invesco, who joins us on set in London. Ben, very nice to see you there in London. I want to take us to your overall view then for 2023 and for stocks. Michael Wilson over at Morgan Stanley says that US corporate profits are set to experience a drop like the 2008 era. And a lot of voices are talking about how expectations for profitability are too high when we head towards what looks to be a recession. What are your expectations for profits and how that plays out for stocks?
Well, I don't expect it to be a particularly rewarding period for earnings. You would assume that they would be coming under pressure. I think it's all about whether the market can sort of look through the valley of weakening earnings on the back of more accommodative monetary policy and the prospects for recovery as we move into the sort of second half of the year. No doubt investors should be sort of steeled for volatility as the earnings endure some downgrades. But although we didn't see it last week, if we do start to see some more softening from the Federal Reserve, then perhaps markets can deal with that earnings weakness.
But do you really expect the Fed to start softening? I mean, the labor market has squarely been the new focus of Powell, of everyone else, and it's not showing cracks.
No, it doesn't seem immediate, you're right, but I think what we can observe from this Federal Reserve is that it will change its approach if the data requires it. You know, just as it didn't expect inflation, soon all of a sudden it became much more hawkish. If we were to see, let's say, a third print of inflation weaker than anticipated, something of a downward trend, then we could see that softening. But you're right, I think the labour market will be crucial to that. But even there, you know, we might be seeing, you know, weakness in initial jobless claims, or off the highs at least. So there could be some evidence that labour markets are cooling. But you probably would need to see that to see like a dramatic softening in language, yes.
Well, it's still some uncertainties. And because of that, it does feel like there's still the strong demand for cash from investors, perhaps because cash-like instruments actually yield something. But Ben, I love you, right? Investors may not want to get too cute with their timing. I really like that. What does it mean not to get too cute right now?
Well, look, I think we're all, I don't know if it's sort of World Cup fever, but we are seeing this sort of game of two halves type setup, in that we've got weakness to come, we've got hawkish central banks and earnings downgrades, but that type of the recession needn't be too dramatic. Because there's not lots of imbalances. You know, consumers aren't in too bad a shape relative to history, banks in good shape. So the recovery could be quite a strong one, and so that could be rewarding for investors second half of the year. So bearish now, bullish second half. But you know, you sort of try and time that, it can be a very sort of emotional and less rewarding place. I think
much like the World Cup.
Much like the World Cup for most people. I think the strategy, or our preferred strategy, is just sort of be prepared to wear the volatility, but then fully participate in the recovery should it come in and around that second half.
Okay, I don't know if you're casting the equity markets globally there, Ben, as the Argentinian team, but maybe that parallel works. Let me ask you about the extent of recession that you expect to see then, Ben, because if we do see a milder recession, isn't the negativity of that outcome that we just get more hiking from central banks? It seems difficult to find a positive way out of this unless inflation really did come crashing down.
Yeah, I mean, I think a recession is not anticipated by everyone, but it's certainly widely discussed. So I think those recessions that catch investors off guard are probably more damaging than those that are more broadly participated, but more broadly expected. But you're right, there is less room for the Federal Reserve to be overtly generous if inflation is still above target and economic outcomes are only relatively weak. But, you know, I think in a mild recessionary environment, coupled with the base effects that we're seeing from inflation and all those other things that are starting to see inflation move off its highs, you know, as we get into sort of the middle of next year, it could be that the Federal Reserve are pausing and that growth is recovering, and that could be, you know, enough of a mix to see equity markets enjoy a bit of a recovery from that moment.
Ben, what do you expect to see in credit markets? How invested do you want to be in credit markets, corporate credit in particular? A lot of people point to the spreads we see at the moment and say these are not spreads that look as if they're preparing for a recessionary environment. Where does that leave you?
Well, I mean, spreads have certainly come in a little bit. I would have said, just a few weeks, maybe a month ago, that actually those spreads probably were preparing for a recessionary environment. Now it's a little more marginal. But I think much like equities, spreads will have investors in credit will have to endure some volatility until we see more firm commitment from the Federal Reserve, which doesn't seem imminent, as we've discussed, but mightn't be too far away. That they're softening their approach, and in that environment, you know, you expect sort of the duration element as well as the spread element to reward investors, and that I think on balance sort of sets credit investors up reasonably well for 2023. Although again, you know, could be a bit nervy in the early parts of the year.
Okay, yes, very much like that World Cup final. Then we're back to that. Ben, thank you very much for joining us. Ben Guthridge of Invesco on set with Danny there in London. Coming up on the crypto front, we will talk to Tim Grant, head of EMEA at Galaxy Digital. Really great to get his perspective on the latest FTX news flow, of course, but also about institutional adoption of Bitcoin, of blockchain technology, where risk management for the sector goes post FTX. All of these things very topical. This is Bloomberg.
Access the financial world on demand.
Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in New York with Danny Berger in London. Now, Sam Bankman-Fried is said to be planning to drop his fight against extradition to the United States. Sources tell Bloomberg that the disgraced FTX co-founder is expected to tell a court this week that he won't fight the request. He's currently being held in prison in the Bahamas. Let's take stock of where we are post-FTX in the crypto story and blockchain story. Tim Grant joins us, head of EMEA at Galaxy Digital, on set here in New York. Very good to see you here, Tim. Let me ask you about where we are on the risk management conversation, because whilst we've seen testimonies around what happened at FTX, a light has been shone very brightly on a lack of risk management at that particular business. I mean, we heard talk of accounting being run on QuickBooks and Slack being used for expenses. I mean, how does the crypto world, I suppose, distance itself from those kind of practices and say, that was just FTX, we do things differently?
Well, there are two elements at play here. I think when you look back at last week, the coordinated action by the Department of Justice, the SEC, the CFTC, the FBI, tells us that they think they've got some credible evidence to suggest that this is the bad actor that we all think he is. And that's now in its box, and we should all just move on from this. Let's let the process play out. We're dealing with a huge bad actor and a very naughty boy. Let's just move on. But there is this element of, well, how was it run, and how is the industry run? And I think that is the right question now. I think the one thing I've been saying recently is there's no such thing as crypto economics. There's just economics. There's no such thing as crypto risk management. There's just traditional risk management. And I think those institutions that are demonstrating robust, transparent risk management with people at the helm who've been through multiple cycles, who know how this works, will be the ones that the institutional adoption cycle kind of prefers to go towards.
Okay, and when you're talking to large institutions, more traditional finance, I suppose, and you tell them those arguments, do they accept that FTX was just a special case? Risk management in the crypto world is done more professionally elsewhere.
Well, I think in some respects, this coordinated action last week has done us all a favor. It's shown that it was very quick, it was very swift. So it's pretty black and white. These guys have just been a bad actor. That's not so much about a pervasive issue of risk management being done in the wrong way or with lax standards across the board. Yes, it means we want more transparency in general, and trust is the name of the game here. Our institutional clients understand risk management, and they understand good and bad risk management when they see it. Look, when you look at the FTX situation, there's so many high-quality players were duped by this story.
Yeah.
They also understand risk management, but that's what bad actors do. They create a veil, and it's hard to pierce through. It will now accelerate the need for our institutional clients to ask the right questions and get the right answers, and that's to be welcomed.
Okay, Danny.
Tim, great to talk to you. Danny here in London. Are those institutional clients getting the right answers? We learned that Mazars, the French accounting firm, is no longer going to be doing these proof of reserve practices for the Crypto.com, the Binance of the world. Are you and your clients confident in these exchanges?
Well, we're all on a journey here, Danny. We, being a large market maker around the world at Galaxy on multiple exchanges, we've pulled back. And when we're part of that liquidity drop, you were talking in a previous segment about the lack of liquidity in markets in general, it's no different in the crypto space. And part of the reason that we've pulled back out of these exchanges is we want also to demand the level of transparency and trust that we want to be comfortable with. We have an exchange risk committee, just like any other grown-up traditional institutional player. Now, proof of reserves is a fascinating concept. It's actually been around for quite a while, and there's an interesting tidbit here that your viewers may not know. OKX, which is one of the larger crypto exchanges, actually produced a proof of reserves metric several years ago, and the CTO at OKX at the time was Changpeng Zhao. It's the famous CZ who's now the CEO of Binance. So he knows a thing or two about proof of reserves. The key with proof of reserves is it has to be robust. It actually has to be cryptographically robust, cryptographically provable, and it has to have both the assets and the liability side in there so that we understand both sides of the coin. The challenge is we haven't reached a standardization of that metric, and Mazars, their public statement was they're worried about the public's perception of that metric, and I think we're sympathetic to that. We need to get to evolve to a state where that proof of reserves metric is well understood. Is the big? We want to see the big four ultimately coming into this, and we know that they're sniffing around the space. So we're on a journey, Danny. We'll get there.
So if you've pulled back in the meantime, where are you instead? What are you doing instead if you've pulled back from some of these exchanges?
Yeah, it's a great point, actually. You know, we have multiple businesses at Galaxy. We're not just trading, and that's an important role that we play in the marketplaces, but we're also doing principal investing, we're doing banking. And one of the things that we're focusing on, we're actually seeing our institutional clients focus on, is looking for the builders, looking for those projects and those entities that are really demonstrating where this next phase is going to go. And on top of the risk management element that we were just talking about, the trust and transparency element, people just want robust business models. They want value creation in a way that we can understand with traditional metrics and fundamental analysis. Sure, there's lots of new elements we need to learn with this new technology, these new tools, but at the end of the day, remember, there's no such thing as crypto economics. There's just economics. And so money's still investing. I was just looking yesterday at some of the trends over the last month. It's been a very quiet month, but you're still seeing good projects get rewarded with good investment. And I think that's going to be the name of the game while we're in this sort of low volatile, low liquid situation.
All right, so focus on the builders. Tim, thank you so much. Thanks for coming to see us so early here in New York. Tim Grant of Galaxy Digital. And tune in to Bloomberg Crypto. That's tomorrow at 1 p.m. New York time, 6 p.m. in London. The weekly show, co-hosted by Matt Miller and Kaylee Lyons, covers the people, transactions and technology shaping the world of decentralized finance. This is Bloomberg.
Stronger that moment that you're lifting the barbell. You get stronger as your body is making repairs, making recovery. Recovery is a when and how you get fitter, faster, stronger.
Recovery technology includes everything from massage guns and foam rollers to compression boots, hyperbaric chambers, cryo chambers, infrared saunas, and even infrared pajamas. And athletes are partnering to become investors to take those products mainstream.
When you look at tech in sports right now, it's completely innovating the way training's going, completely changing the way recovery's going. I think sky's the limit as far as where it can go.
But while some of these products can feel amazing, it can be difficult to differentiate between what really helps the body and what just tricks the mind.
Every time you're chasing the latest, greatest, newest tool, you're probably chasing a mirage.
Lots happening on Wall Street.
I'm quite encouraged. The center is holding.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
A lot of these areas still have very, very good valuations.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot. We're talking about a significant hit to our standard of living.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in New York with Danny Berger in London. Just a bit of breaking news coming through this morning around Meta, the owner of Facebook, of course. Meta gets an EU antitrust complaint over its Facebook marketplace. The EU accusing Meta of unfairly tying its marketplace to Facebook. The EU findings are preliminary, we understand, and Meta has a right to contest them. We will watch that stock pre-market, and we'll watch as that story unfurls. Let us continue to focus on European narratives, and the one around gas is very compelling. EU member states meeting today are set to discuss a price cap that's almost a third lower than the original proposal. This in relation to natural gas, of course, in an attempt to contain the impact of the energy crisis in the region. For more, let's go to our correspondent Maria Tadeo, who is in Brussels for us. Maria, what can we expect today then? Will we finally get to a gas cap that all participants can agree on?
Well, Anna, finally, I mean, that is the question. Today, energy ministers are still inside this building. The meeting, as far as we know, continues, but the pressure is immense to get a deal through the finish line today for two very simple reasons. It's the end of the year. The clock is ticking. If you don't get it done this week, then it's going to wait, or it's going to have to wait until 2023, and that is the core of the winter. And then secondly, politically, European leaders made it very clear last week that the EU needs this comprehensive energy package, which includes, of course, the biggest sticking point of all, and that is the price cap on natural gas prices. Now, remember, initially, the European Commission had put on the table 275 euros a megawatt for 2 hours to trigger this price cap that was seen as not aggressive enough for a number of countries. The new proposal now targets 188 euros megawatt hour for 3 days, so both the amount but also the length has changed. The question is whether or not this new proposal will be enough for everyone to get around it, get behind it, infuse a political momentum, and sign the deal today.
Maria, thank you very much. Bloomberg's Maria Tadeo there, keeping track of the clock that is running out of time. Now, as Europe tries to get a handle on the energy crisis, Germany has put its first LNG terminal online. It's in the country's north coast, the first of several specialist tankers that Berlin is counting on to ease its energy crisis. Joining us now at the site of that terminal in Wilhelmshaven is Bloomberg's Oliver Crook. Oliver, the terminal, it's online. Germany is planning more. How does this all fit into the wider gas cap debate that Maria was just discussing?
Well, the issue is that here you see that there is the facility has just opened, and it's all about energy independence from Russia. And in order to get that independence, it needs to have the LNG to go into that cargo. The fear in Germany, and this is what creates angst with the debate that's going on in Brussels, is the fact that they may be outbid by other buyers in the rest of the market who can afford to pay above a cap that is set by the EU. That is what's creating a lot of anxiety here in Germany, and that is what the Germans want to avoid.
Oliver, thank you very much. Bloomberg's Oliver Crook with the latest on gas. This is Bloomberg.
Fixing things that go wrong and smoothing out bumps in the road is what customers expect from energy providers. And for Duke's renewable assets, that process is overseen from one room in an office building in Charlotte, North Carolina. Brian Savoy showed me around the company's Renewable Control Center.
This is where our operators are monitoring and managing over 5,000 megawatts of renewables across the United States.
How would this differ from like a conventional asset monitoring center?
Yeah, so assets, historically, they would have the monitoring center on site. So you might have an operator with screens, but at the site, whereas this we could do 90 sites. There's offshore wind, onshore wind, solar, and they're looking for the smallest change in output because every megawatt hour is money. When one of these assets isn't producing full capacity, we're putting another resource on, and we're having to toggle this on a consistent basis. And this, as clouds come, this is by the minute. This is not, or the hour it's off. No, it's by the minute, and then it'll fall, come back, and we have assets that follow this digitally as well, so that we can keep a consistent flow of electrons on the grid.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Count Under the Close. Welcome to Bloomberg Crypto.
Given the fact that the economy is likely to contract next year, central banks ultimately will be cutting in the back half of next year.
The danger here is that central banks start to go a little bit too far.
I do think the Fed will continue to raise rates through the first quarter.
I think the market and the Fed are well aligned.
We've got 75 basis points worth of hikes left in the dot plots. I think you're likely going to see that, and I think you fight the Fed on this at your peril.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Most likely the best World Cup final ever. In the best sport worldwide.
That was a step too far.
Live from New York City this morning. Good morning. Good morning.
The first one, okay. Second one,
Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Farrow. We'll get to the football a little bit later. Let's start with the elephant in the room. TK, Tesla up by almost 5% in the pre-market. There is a poll ongoing on Twitter hosted by Elon Musk. The question as follows: should I step down as the head of Twitter? I will abide by the results of this poll. That poll closes in about 18 minutes' time.
I haven't taken the poll, full disclosure. I was, like a lot of other people, most unhappy with some of the antics over the last 7 days. But, John, I guess the poll is there. What I would suggest is if you buy something for 8 times sales or whatever it was, and you have to reset, you better find the biggest pool of money, which is near the biggest pool of oil, which happened to be where the biggest pool of English football was.
Which happens to be where Elon Musk was over the weekend, Bramo, raising some questions about the future of this company. And I would say also, going back to the Tesla point, I imagine there might be some happy Tesla investors if this one concludes where it is right now, with yes at 57.5% and no at 42.5%.
with more than 17 million votes already administered. So maybe Tom didn't vote, but a lot of other people did. There is an issue of whether this is basically an excuse to back away for something that's already a done deal, right? Is there a question behind the scenes? There's been a lot of concern about what kind of investor pushback he is getting after a number of moves that have caused advertisers and users to pull away at a rapid pace. How much does this basically just cover for some of those steps?
We'll pick up on the story a little bit later. As I say, Tesla in the pre-market up by more than 4% at one point, up to close to 5 percentage points higher. Right now, equity futures trying to bounce off of the lows on the S&P 500, coming off the back of a weekly loss. We're up by about 0.4% here on the S&P 500. TK, we're doing okay in the bond market at the moment. 351.86 yields high, Tom, by about 3 or 4 basis
I'll
points.
talk equities in a bit here. I'll also do it right now as we slide into the morning. Bitcoin's stable here with the Binance. Not much news there this morning. John, I'm watching oil. I think with all the recession gloom, and again, we'll talk about people that are looking at growth. Mike Wilson out with a smart note over the weekend. But I got West Texas Intermediate 74.63, which is not all that distant from a recession like $69 a barrel. We're not there yet.
Tom jobless claims, 211,000. That's not screaming recession right now, is it?
I strongly feel, I got to be careful. We're not in the business, folks, even on a Monday where we're taking polls to give our opinion. But I will state categorically the certain recession tone maybe is off the mark. Michael Ferroli with a smart note Friday for JP Morgan, they re-emphasize 1.5% GDP for this quarter, with the trade dynamics being the variable there. They see a robust consumer.
Lisa, futures right now up 0.4%.
I like that idea of taking Twitter polls in terms of whether or not we should take opinions on different issues. Actually, just a joke, just kidding. Taking a look at this week ahead, it is a quiet week. It is a quiet day. We do get, however, a bunch of housing data, including home builder sentiment today at 10 a.m. Housing starts 10 a.m. tomorrow. Then we get existing home sales at 10 a.m. on Wednesday. New home sales Friday at 10 a.m. I am watching existing home sales. How much do the volumes continue to plummet as there is a stasis in a market that is poised for some sort of ongoing weakening? That is really an issue given the fact that we've seen mortgage rates go up to where they are, come off just a little bit. Can you start to get a little bit of a softening? There's also a focus on the consumer throughout the week. Really starting on Wednesday, we get consumer confidence data at 10 a.m. that day. Friday, personal income and spending data, as well as, of course, the core PCE metric that the Fed looks at. How much do you see a real sort of deceleration in the inflation, or do you start to see this concern about a reacceleration that some people are warning about? We also get the University of Michigan December sentiment survey at 10 a.m. Perhaps Sean will get actually surveyed this time around. And you guys both mentioned it. Planned labor strikes. We have been talking about them in the UK. In the US, we have an Uber strike today. In New York, there have been rolling strikes at Starbucks. On Friday, in the United Kingdom, there are about 1,000 workers that are planning to strike at a number of UK airports. How this factors into a discussion about wages at a time when a lot of policymakers want to see wages decelerate, come down, soften, and other people are saying, how are people going to live, John? And this is going to be a tension heading into year end.
Hey, Lisa, thank you. Looking forward to the coverage of a couple of those themes through this morning, Tom, particularly the strikes around the UK, whether that spreads to the United States in a much more material way in the coming months.
Well, the strikes, I'm watching it sort of on a historical bent. It looks like the United Kingdom back to the 1930s, but it's tangible over there. And it's good to have a first guest who I think's got a visceral feel. His note this morning, John, is very much towards an analysis of the United Kingdom.
I'm sure you like the headline of that particular note. It's the time for a Santa rally before the hangover sets in. Kit Jokes joins us now, Chief FX Strategist at SocGen. Kit, I guess you should answer your own question. Is there time for a Santa rally before the hangover sets in?
I think there's more room for one in the foreign exchange market than the equity market, which I never know anything about anyway. But if the Santa rally is a weaker dollar and sometimes a stronger equity market, part of the problem in the US is that the equity market had a fantastic November. So Christmas just came early. The foreign exchange market, yes, I think the dollar can go on weakening through the back end of this month as positions get taken off. But I think in both cases, and partly largely because the market is convinced and won't be dissuaded, I don't think in a hurry, from the idea that the economy is slowing and the Fed won't get or be able to keep rates as high as it says it's going to. I think that's going to run into us in January. I think risk assets are going to struggle somewhat with the new dawn of a new year saying, yeah, we might have to have rates at 5% for a hunk of time because they've been saying so, because actually nobody canceled Christmas and the US consumer has a fair amount of money saved up. Right. Employment is very strong. Wage negotiations are on the side of scarce labor. And in that environment, I think we say January could be bumpy, but I'm going to enjoy this week.
That's good. Kit, I'm going to look at the Standard & Poor's 500 in a moving average study of three moving averages, and they have converged to a point, the three moving averages, for the first time since the spring of 2018. I believe that is doldrums, is where we are. Across assets, and in terms of taking on risk, what do you do when you've got a moving average convergence like we've got right now?
I think you have to be careful across assets. So in general terms, I think things get helped by the fact that the bond market is going to look a long way through the rate cycle, that Treasury yields, I think, have certainly peaked at the longer end of the curve. We'll spend a lot of time worrying about recession because the curve's so inverted and because central banks are still fighting inflation, and that's going to help things. I think the credit market is going to continue to take comfort from the level of yields and spreads that have been available and from the demand that comes through that. Equities, I think, are more difficult. And I think in the foreign exchange market, to some degree, it's still what goes up comes down, what's gone down a long way comes back up. The dollar has peaked, and it's going down from those levels because the U.S. Had such a perfect storm of beneficial news over the last couple of years.
So when you say what goes down may come back up, are you talking about the yen? Could you start to see some buying in the Japanese yen, especially after some of the rumors over the past 24 hours about a possible move away from some of the incredibly dovish policies?
And look, I think 90% of the yen story, at least 90%, is about the U.S. That Japanese investors have got to start hedging the currency elements of their U.S. Treasury holdings or dollar holdings at this point in time as the currency turns around. But it's correlated so closely with moves in 10-year note yields. So it won't be a straight line fall, but dollar yen should fall. And frankly, if it fell to 120, people would just have to revise their forecast to 115 or something, because history on dollar yen is that it can go an awfully long way up and come all the way back down. This thing in real terms is cheaper than it was when Bretton Woods ended in the early 70s. It's astonishing how cheap it is.
Well, the cheapness there is tangible, but that looks for a big figure move. Can you place a little bit of money, for example, long yen, strong yen, I should say, strong yen to get a big figure chance, almost like a bet in Las Vegas, like if I was betting on France to win the World Cup?
Sort of think you could. Yes, I mean, I think that's it. The danger is it has form. They're the world's biggest holders of foreign assets. So if you turn around and say that the Japanese own, for the sake of argument, lots of U.S. treasuries, and as the U.S. yield curve flattened as short yields went up, it became more and more expensive to hedge the foreign exchange, so they didn't, and they made money as the dollar went up, and now they have to hedge or get out of those assets as dollar yen goes down. So that gives it a capacity to overshoot that's pretty scary. And when you say that, fair value is somewhere a long way below, the temptation is to say, yeah, I'd like to have some leveraged bet a long way down that dollar yen can fall a long way, or that the yen can go up against something else a long way.
Okay, we've got to talk about this. Emiliano Martinez, Arsenal, 2012 to 2020, 15 appearances. Why did you never play this guy?
Oh, we played him 15 times. I don't know. Everybody liked him. He went on loan. It's a wonderful story. It's a bit football-y, but he came to London to help finance his family, who were very poor. And he went on loan all over the place because young goalkeepers never get given much of a chance. And he is possibly the best penalty shootout goalkeeper the world has ever seen. I'm so pleased for him. He's just, he was popular at the club.
Awesome for Argentina and just awesome through this World Cup.
Is that legal to do this?
Sokjen.
Like
he was intimidating those players.
Is this
whatever that is?
I'm
on
with
radio,
whatever you're doing is illegal.
It's absolutely, definitely
it's
red
legal
card.
to do that.
He was incredibly intimidating, I think, for a lot of those players. Holding onto the ball, then throwing it away in the shootout, making the other player go and get it. It's smart. It's a psychological game.
Huge. Yeah, huge.
That's what it comes down to.
And I said this a couple days ago, folks. I stand corrected. Mr. Farrow has made clear to me penalty shots are harder than they look. And, the camera comes down and that goal looks awful small.
Can you imagine the scenes? In Buenos Aires in the next couple of days when that team touches down and they do that World Cup parade.
Now, it helps an ignoramus like me. Messi's done, right? Does he retire in glory?
No, apparently not, so I thought he might from the international scene, but apparently not, Tom.
Now, does he, speaking of a Perón, does he run for office like he and Madonna?
Like you're thinking Manny Pacquiao-esque?
Really?
Messi, Madonna?
Are you just trying to...
I'm ignoring him.
This is ridiculous.
I'm ignoring him.
I mean, honestly, his analysis is almost as good as mine was.
Look at those scenes.
To actually get the ball more. Get it in that goal more.
I love how engaged you are. It's great.
Actually, it was an amazing
You've got to score to win, Bramo.
I can't believe the Red Sox let Bogarts go.
Oh, come on.
Stuart Kaiser City, 7 a.m. Eastern Time in the next hour. Coming up next on this program, Elon Musk's Twitter poll concludes in about 8 minutes' time.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Bloomberg's learned that FTX co-founder Sam Bankman-Fried plans to drop his fight against extradition to the U.S. He's been locked up in the Bahamas since last Monday when he was arrested at the request of U.S. authorities. Bankman-Fried has been accused of fraud and other crimes. A crucial vote today in the House January 6 committee. Members will decide whether to recommend that former President Trump be prosecuted for obstructing a government proceeding and conspiracy to defraud the U.S. Bloomberg's learned the panel is also considering a charge of insurrection. There's a suspicion that China is hiding the true scale of fatalities from COVID. More than a month after a huge increase in COVID cases, the country has reported only 2 deaths.
That defies the experience of other, more vaccinated places with better resources. Shares of Tesla are higher on the prospect of Elon Musk potentially stepping back from Twitter. Investors see the social media company as distracting him from running the electric car maker. Musk tweeted on Sunday he'd abide by the results of a poll, asking whether he should step down as head of Twitter. Most of the millions responding say yes. In Argentina, it was a rare moment of euphoria and happiness for a country battered by soaring inflation and political uncertainty. Fans jammed the streets of Buenos Aires after Argentina beat France for its third World Cup title. The victory was also a personal triumph for team captain Lionel Messi, who scored 2 goals. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
I think everyone will still blame me for everything. Yeah. If I acquire Twitter and something goes wrong, it's my fault 100%. I think there will be quite a few arrows, yes.
That was Elon Musk, the Twitter CEO, during a TED Talk on April 14th, just months before purchasing Twitter. Here are the results so far. This is where we're at. So Elon Musk put out a question on Twitter yesterday evening with a poll. It reads as follows: should I step down as head of Twitter? I will abide by the results of this poll. More than 17 million people have voted in this. There are 4 minutes left. Yes is at 57.5%. Tom, no is at 42.5%. So we basically know where this poll is going, TK. Just need to work out what happens after that.
6 days ago, he took X number of reporters out. You didn't know how long they were going to be out for. He waited 2 cups of coffee, reinstated some of them, then more of them. Taylor Lorenz, he restated late last night, I believe. You know, what's he do after the poll? He can change the rules. He's proven he can do that. I mean, I don't really know what to do with this, other than I like your idea, John, that he wasn't in Qatar watching football.
Well, I imagine there's other reasons to be there.
Yeah.
And perhaps there'll be on some reports, and maybe he'll even speak to that in the next 24 hours. Tesla up by 4.75%. Bramo, I think that's screaming something else, isn't it? We want your focus back on this company and not on that one over there.
And it sort of indicates that perhaps there's more behind the Twitter poll than just a whim, more than just whimsy. And that's been a lot of the speculation. There's been a lot of questions around how he was going to raise money. If he's speaking to Qatar, if he's speaking to even the people, his own bankers, is he getting margin calls? Why is he selling Tesla shares? There have been a lot of questions out there that will continue to circulate.
That sets it up. What we know is Bramo, Pharaoh, and Tom have no clue what we're talking about. Let's go to somebody steeped in the history of this affair. Matthew Bloxham joins us, Bloomberg intelligence analyst, really good at linking in the social part of this into the finance part as well. Matt, I've got to go to the finance because that seems to be the mystery. How financially stressed is Mr. Musk right now?
Well, a hell of a lot more financially stressed than he was just, 5 or 6 months ago. And inevitably, he's going to be under pressure from all sorts of people. Tesla shareholders, the bankers financing the Twitter purchase, his co-investors in Twitter. Personally, I don't think that Elon Musk cares so much about the financial stress. He bet everything on Tesla, a few years back. I don't think money is his primary motivation. So if he lost it all, I don't think he would be too stressed. So I think he's a very, complex person to be dealing with as a co-investor or financer. So it's, you'd be pulling your hair out if you'd been lending money or co-investing with him in Twitter right now, I think.
Matt, to John's allusion there of the bankers behind Twitter at $44 billion, I'm going to guess 8 times sales as well. Do we have any knowledge of the debt construction or the equity preferred construction where they hold sway, they hold power, even if they're invisible and behind the scene?
Well, I think there's all sorts of complicated structures there. Margin calls, pressure on his Tesla shareholders. So I think share positions. So I think they for sure do hold sway to a degree on what happens here with Twitter. But I think it's a very curious way to run a business. Asking Twitter social media subscribers to vote on whether you should be CEO or not. I think if you're a banker or a co-investor, they're the people that he should be talking to about what the best thing is to do. And I think, to be honest, it's a bit of a sideshow because whether he's the CEO or not, he's clearly still going to be in the background influencing Twitter policy. So how reassured can you be as a Tesla shareholder that his focus is going to pivot completely away from Twitter? He's been obsessed with Twitter for years. I think it's difficult to imagine that obsession is going to just disappear overnight.
Well, this Twitter poll, to be fair, is just part of the antics that we've come to grow used to. There is also a lot of questions around what's going on behind the scenes with some of those bankers that might have led up to this. You said that perhaps he's not as financially stressed or that it isn't necessarily as important to him as we're making it out. Is there a sense of what kind of constraints he has in terms of debt repayments, interest payments that count in the millions of dollars, and whether that's at all tied to some of his share sales from Tesla, as well as some of the ongoing negotiations elsewhere?
Yeah. Personally, I don't have enough visibility into that and whether there's any immediate stress. I think that would be very surprising if there was right now, but it's clearly a consideration into the midterm. I think Twitter's been under pressure anyway in terms of the limited ad revenues. I think probably what's happened since he took it over is the revenue generation's probably shrunk because we've seen so many advertisers pull away from the platform, waiting for some stability in what Twitter is and what it's going to be. I think the last week, 2 weeks, month has added to the uncertainty rather than diminished it. And as you say, he said that he will abide by the poll, but we've seen so many twists and turns, new policies that Twitter has announced to be withdrawn within hours. So I think we're further away from stability for advertisers, which is 90% of Twitter's revenue than we've been ever since he took it over.
Some just update here, as we have certainly seemed to have passed that deadline. We are now officially at 57.5% for yes, he should step down as the head of Twitter, and 32.5%. No,
yeah, but California hasn't reported yet.
Okay, well, we'll be counting and the hanging chads later on. Matt, I am curious about whether other social media platforms have picked up some of the. That was good. Some of the people who are moving away from Twitter and going to perhaps Instagram or going to Facebook. Is there any sense of what the read-through is for other social media companies?
I don't think there's a huge amount of read-through because in the grand scheme of things, Twitter's never been a huge part of the kind of the social media advertising sphere. It's a relatively small player. So I think this just kind of makes life a bit simpler for all those people that are cutting one social media platform out of the portfolio they use. But, in reality, the bigger issues for something like Instagram is just what's happening in the broader advertising market and whether, the kind of economic pressure we're seeing is putting severe pressure on campaign spending budgets. That's the bigger issue. I don't think even a few million Twitter followers dropping the platform and just focusing on Instagram or Facebook is going to really change anything for those businesses.
Hey, Matt, wonderful to hear from you, as always. Matt Bloxham there out of London. If you're just tuning in on TV and radio, Elon Musk asking in the last 12 hours, should I step down as the head of Twitter? I will abide by the results of this poll. This poll wraps up. 17.5 million people voted, more than the result. 57.5% said yes. 42.5% said no. TK, you get the feeling Elon Musk has got us all on strings sometimes, hasn't he? Playing this game. This is what he's saying. This is what he's going to do. I mean, we've got to work out what he does off the back of this.
This isn't in the CFA curriculum under equities or ethics. I don't know what it is. I'm watching Tesla, and it's about ready to break out to some new strength here, maybe, 157, 158. I'm speechless. I mean, frankly, who cares? The guy grossly overpaid. Everyone agrees.
There's another Twitter poll, actually, with 17.7 thousand retweets, and that would be Snoop Dogg, who is asking, should he run Twitter?
Who?
Oh, here we go. I'm not even engaging.
Okay,
I think to your point, Tom, Tesla up 5% is the story to watch this morning. Going into the opening bow, Lisa's talked about this over the last couple of weeks. That stock's been down by something like 50% since September. There's been a lot of concern about what's going to happen to that name, his involvement in it, what happens to his shares, what happens to the leadership there. Do we get to clean some of that up a little bit later this morning?
Question, is his focus on SpaceX changed because of Twitter? I mean, isn't he doing SpaceX as well?
Clearly, his focus has moved away from everything in order to focus on Twitter. There's also a question, though, about Tesla, about whether this is coming also at a time that the company's facing other difficulties that they have to grapple with, like the slowdown in demand, like some of the production issues. There are so many questions that affect a lot of people, both own shares, who own cars, who work at the company, that is much more serious than a Twitter poll. So I think you're right to bring that up.
Oh, we've got to talk about China as well, the reopening effort in China, the latest meeting when it comes to economic policy. Tom, they might have some business-friendly recommendations, but I don't think we're going to get the big fiscal effort that perhaps some people were hoping for.
Yeah, China was sobering over the weekend. We haven't talked about this yet. I believe it was the Washington Post had a spectacular chart of the flu season in the United States. Terrible, terrible overlay of COVID and flu. That's a walk in the park compared to the reports I'm seeing out of China.
Oh, they got a tough time.
This is serious stuff.
We've got to talk about what's been reported and what's actually happening in the country as well.
Serious stuff in China.
Bill Lee, the chief economist at the Milken Institute, joining us on that next.
I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it, building it, building it. You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
Welcome to the world of decentralized finance.
I'm going to take a look right here at regulation.
We are seeing digital currencies under some pressure.
Bloomberg's covering all things crypto. The people.
I want to have some of my money outside of the sovereign.
The transactions.
This is a simple case of where did the money go?
And the technology.
If people wish to invest in it, they must be prepared to lose their money.
I am still very positive on real utility into this space.
Bloomberg Crypto, Tuesdays.
Three-day losing streak on the S&P 500 coming into Monday. Good morning to you. 2 weeks of losses as well. We'll leave that behind and try and build on a morning of gains, up 0.4% on S&P 500 futures. NASDAQ futures up by around about 0.5%. The 2-year, in the face of a higher dot plot at the Federal Reserve, yields were actually down on the week last week by more than 10 basis points on the 2-year. We're back to 417.78. Yields unchanged this morning. In Europe, anything but unchanged. Take a look at the Italian 10-year versus the German 10-year right now. Up another 8 basis points on the Italian 10-year. On the 10-year in Germany, up another 4. I was just looking at the spread between the two. We're back to about 220. So the wides of the year were about 250-ish. So we're not at the wides of the year, but a breakout you've seen in both the Italian 10-year, Tom, and the German 10-year over the last 3 days has been phenomenal.
Yeah. What I would suggest in a slow and lazy week is it's not going to be slow and lazy. And I go to the moving average convergence. Michael Purvis, I thought, was great on this at Tallbacken over the week. I mean, if you look at the turmoil of the last 2 days, John, a VIX of 22.68 is not where you think we would be. We should be out at a 24, even dare I say a 26 VIX. We're not, because it's doldrums, this lethargy is clicked in, and that's when the pros know you get your radar up.
There's nothing boring about what's taking place in Europe right now. If you take the front end of the Italian curve, you can do the same thing with Germany, but let's take the 2-year in Italy. On Thursday, up almost 40 basis points on the session. On Friday, up another 4. This morning, Tom, up another 5. So we've put a lot of weight back into that yield in the last 3 days.
I'm going to go to my focus, which is the war on Ukraine. Greg Vallier, just as a note at AGF, focusing his entire morning note on Ukraine. Right now we focus on China, and we have qualified William Lee. He is chief economist for the Milken Institute with his service for years at the International Monetary Fund on the Pacific Rim Watch. Billy, you haven't been to China, but you have connections like nobody else. What is the reporting on COVID missing right now about the hardship to the Chinese people?
Oh, I think everyone I've talked to about China has mentioned how devastating the opening up is appearing to be, and as seems with the ghost town in Beijing, all of the outbreaks that are taking place in every mega city in China, this reversal of COVID policy is striking everyone as just not being done well. Right. It's not well organized. There's a shortage of everything from Tylenol to cough medicine. And I think one of the things that people have really pointed out that hasn't been talked about enough is that Xi Jinping has been silent throughout this entire episode. When Wuhan first was shut down, he was first to be out there to say, we need leadership and what a great job that people are doing. Right now, he's completely silent. And I think the spin masters are going to have to do something about the loss of face of Xi Jinping not being able to live up to the zero COVID policy anymore.
On a serious point of this, what is our experience in a totalitarian regime and uniquely Chinese regime dealing with the loss of prestige, of face, of dignity? What is the history of how he will adapt to this loss of face?
Well, let's go back just a few months to Pelosi's visit to Taiwan. You had this way overreaction of militaristic bravado and wolf warriorism. Well, right now we haven't seen that kind of bravado manifest, but just wait a few more months and see how things turn out. If in fact the revival of the Chinese economy, which everyone is expecting, doesn't take place, I think you're going to start seeing some kickbacks. And what I'm afraid of is a Hong Kong-style repression, as opposed to just letting things evolve the way they're doing now.
Bill, based on what we've seen, the sort of sudden reversal on COVID-0 that we've seen and the way that it's played out, what's your guess in terms of how long it will take for economic activity to return to something more normal in Beijing, in Shanghai, throughout mainland China?
Lisa, that's the big question right now. The consensus view that everyone seems to have, including the official view, is that once the sicknesses get out of the way and people get back to work, we're going to have a massive revival in the GDP, domestic demand in particular. The consumers are going to want to spend the way the U.S. consumers did, and everyone's going to have so much savings in their pocket that it's going to burn a hole, and that everyone's going to go out there and just buy everything. Well, I think there's a sort of huge downside risk to that scenario. And if you keep in mind that the property market is in disarray, no one believes that the wealth they put into the property market, which accounts for the bulk of the savings of most consumers, is really there. And so the wealth effect is really depressing consumption. On top of that, when your children are not able to get a job, youth unemployment rate is well over 20%. The permanent income of a family has been completely destroyed by what's going on in China. So that scenario is something, the downside pressures there is something that people haven't talked about enough. And the consensus view of a 5% GDP revival later on this year, next year, is something that is I think, questionable.
Bill, you've come on this program before and talked about the main way to talk about China and growth on Wall Street and the actual reality and how different those two can be, a potential for a two-handle on growth. Based on your conversations with people now, has that tone changed? Is there less deference? Is there more of a feeling of moving away from China because both the prospects for growth are diminished, as well as the potential uncertainty around leadership has made people bolder?
Well, we already got the two handle on growth in most forecasts prior to the reversal of the COVID policy. And now looking forward, I'm hearing rumblings of this bimodal distribution in all the forecasts. The optimistic consensus scenario is getting a lot of the public play, but the downside risk that I talked about is something that is very real. And I think one of the linchpins to reviving domestic demand is whether or not the state and local governments are able to put together a program that allows the property market to come back into shape. But the only way for them to do that is by debt, local government issuance of debt. And right now, the only source of revenue for local governments is the property market. They can't sell land. And so the value of these bonds and the creditworthiness of these bonds, I think, is going to go down the toilet, as it were. So I have a hard time seeing how fiscal policy is going to help domestic demand revive. So and without the rest of the world being a locomotive for growth in terms of bolstering China's exports, it's really very hard to put together that 5% GDP revival that everyone seems to have.
Billy, the ballet between the city-states in Shanghai being a focus in Beijing, how is that tipping right now? Is it in this crisis, is it more federal or more city-state China?
Well, Tom, there's much more federal blame for local incompetence in the kind of rhetoric that we're hearing. And so essentially all of the downside is being attributed to the over-enthusiasm of local authorities, either on the COVID side, locked down too severely, or now opening without adequate planning. So I think that tension is just growing and has always been there historically for China. But right now, I think the blame is being shifted very, very rapidly onto local authorities. And we may see some heads roll because things are not going so well.
But we've got to talk about the reliability of the data. You've been absolutely fantastic on that with us through much of this year. We know from reports that the dead are arriving at funeral parlors across the country. The crematoriums are starting to fill up. And yet over the last 2 weeks before today, as far as I was concerned, we hadn't heard of a single death in the country, according to officials. I believe their country has now reported 2 virus deaths across across the whole country, Bill. Bill, can you help us understand how reliable some of this incoming information may or may not be in the next few months?
Well, John, having worked at the IMF, and I know that my colleagues there put together GDP numbers in a way that is really state of the art. So I would say the official data coming out of China on economics is about as good as it can get. But now the question is, what's being reported and what are the inputs into that those GDP numbers? The example you cited, the overactive use of crematoriums and funeral homes and the backlog there is something that all my friends have cited as evidence that things are just not going well. And we don't really know the depth of how bad things are in China.
It's pretty depressing stuff, Bill. It really is. Bill Lee, thank you, sir, of the Milken Institute. TK, it's deeply depressing stuff.
Yeah, it is.
Countries we try and reopen, and widely expected by many people, I'm sure.
Yeah, and it's anti-science. I mean, it's all there is to it. And you go, okay, you've made this commitment. Obviously, there's huge risk, huge visibility, I would suggest, and the politics of it and all that. So why don't you have some form of original vaccines and boosters come in to make everybody win, including the leadership in Beijing? And we're not there yet.
You've pointed to this a few times, the reluctance, Tom, to embrace the mRNA vaccines that were used across the West.
Yeah, I just think, okay, there's been a change, and maybe now's a time where you can, even if it's a conduit through another country. I mean, you take the science of the West and channel it through, you name the country, Lisa, and everyone saves face.
There's a big question, though. Why in this manner? It's one thing to move away from COVID-0. It's another thing just to say, okay, it's over, and to just pivot completely without any preparation, and then just not report the deaths that ensue from that when the data doesn't resemble anything that we've seen in any other reopenings around the world. So there are a lot of questions here. How that blows back into the political leadership and how they message this is really going to be key.
Well, you know that old question, bit cliche, how would you define success? And I guess when it comes to China, it's up to how she wants to define it. He gets to define it, right?
It's a great question. Do they start to focus on the economy as a measure of success, the housing market as a measure of success?
Don't know.
Equal distribution of wealth as a measure of success, or the ability to go out and shop freely in stores and walk and go meet with your friends and family as a measure of success?
It's very important to start your grocery shopping today for the holiday season. We're focused on Twitter polls today. Of course, the important one
what poll have you
Mr.
got?
Musk. Well, I don't have this poll, but I think it's important. Martha Stewart called me up. She's a big fan of the show. Good morning, Ms. Stewart. And she said, David Houston's killing it right now. Brussels sprouts for Christmas. It's the lovely taste of Christmas, or it's Satan's gift from hell. You make the call.
Where do you stand on this?
Oh, I love them. It's a lovely taste of Christmas. Yeah, okay. Christmas can be every
two
year
votes.
as well. But this is the kind of polling that, seriously, the polling is something Twitter, I think, is clumsily underplayed, and it could be a real, revenue raiser for them in some way. And they've never, this was way before Musk.
Yeah.
They've never found opportunity with revenue streams.
Are you putting your hand up this morning to run the company?
No, no.
You offering to?
No, I don't.
To provide some leadership.
It's serious stuff, and what I've learned.
Oh, incredibly so.
With the collapse.
Yeah, the way you made this segue was hyper serious.
Segui, yeah.
Sure.
With the collapse of Twitter, I've got a new respect for all these systems that were in place, employees that were thrown out the door, and certain parts of Twitter just died instantly.
What'd you miss? What's gone missing?
The security, the security filters, the vetting of bad and evil people. Some of the garbage I see on my feed.
I get a lot of crypto stuff. The crypto spam.
Yeah.
The bots pretending they've got this great idea to make lots of money. Then the next bot comes in and says, "Yeah, I've tried that." Then the next bot. How does that work?
I have no idea. But they all mention, they name drop the same handle, and they try to get you to.
Have you tried it?
No.
Just to see if it makes money or not.
Brussels sprouts.
In order to buy a truckload of Brussels sprouts. I love Brussels sprouts.
Satan's gift from hell.
Really?
No, I'm just trying to be different, guys.
They're so good.
Helene Becker's coming up from Cowan on the airline business. Looking forward to that from New York. This is Bloomberg.
Throw some bacon in those Brussels sprouts, all good. Keeping you up to date with some news from around the world with the first word. I'm Lisa Mateo. Well, Bloomberg's learned that FTX co-founder Sam Bankman-Fried will end his battle to stay in the Bahamas. He plans to drop his fight against extradition to the U.S. to face criminal charges. Bankman-Fried has been locked up in the Bahamas since last Monday when U.S. prosecutors accuse him of fraud and other crimes. He'll appear in court next week. European Union members today will again try to break a deadlock over a controversial proposal to contain the impact of the energy crisis. They'll discuss a gas price cap that's almost 1/3 lower than the original plan. Germany has been pushing for a cautious approach, while Belgium, Germany, Greece, Italy, Poland demand for a more aggressive tool. And meanwhile, the European Union has filed an antitrust complaint against Facebook parent Meta. Regulators say the online classified ad business Facebook Marketplace distorts competition. They also say that Meta imposes unfair trading conditions on competing online ad companies that advertise their services on Facebook or Instagram. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
Suppose somebody is watching and says, I want to be Ari Emanuel when I grow up. What should somebody do to get into the talent agency business or the business you're in?
Well, it's hopefully what I've taught my kids. You got to be intellectually curious. You got to be, you got to show up. And you know this like I know this. I got on a lot of planes. You just, even though that voice in your head is saying, oh God, I'm so tired, I don't want to do this. You got to show up. You got to be charmingly relentless. You have to build emotional endurance, because there's no straight line to success. It's kind of all over the place, and you have to just be able to work through those things. And then I think one of the things that I do every week is I try to create serendipity.
Good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets. China open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power.
This is Bloomberg.
Wage growth right now is 4.5 to 5, depending on which series you're looking at. But the wage growth itself is not the problem. The problem is the labor market is out of balance, and that's causing the effects we see. Just like it caused, things out of balance caused price inflation.
The brilliant Mary Daly of the San Francisco Fed there, weighing in on the labor market and the effort to rebalance things. Live from New York, let's get you a flavour of the price action. Equity futures look like this on the S&P, up 0.25%, just off session highs. Yields higher by 3 or 4 basis points on a 10-year, 351.86. Let's talk about Tom's favourite industry right now. Tough year for airline stocks and anyone trying to pay the prices they're charging. Helene Becker says things are going to get better in the year ahead. Helene over at Cowen writes the following: airline shares are not far off pandemic lows, but revenues are above pre-pandemic levels and are keeping pace with costs. We expect higher costs in 23, driven by labor, fuel, maintenance, and interest expense. But Tom, we also believe revenues will grow, driven by ancillaries and a shift in mix to more high-yield traffic. Do you want to talk about that high-yield traffic?
Well, you talk about the high-yield traffic. I'm going to go there now in the social construct of where we are, but the financials here are germane as Helene and everybody else readjust to burgeoning EBITDA and those orders from United Airlines the other day for international and wide-body planes. Helene, there's got to be a behavioral change out there right now. The ratio on a given trip to Europe, a popular trip to Europe, to Paris, is 10.4 to 1 on business class. I've never seen that. Is there going to be a change on the aircraft to ever more business class and premium economy, where economy drifts away?
I don't think economy is ever going away completely, but yes, there's
over the last couple of years, we've seen this shift in people willing to pay for comfort on board the aircraft. So they're not willing to go all the way to business class, but there's that section in the cabin, that premium economy, where it's comfort and less expensive and more affordable. So I think that's the shift that we're seeing, and the shift in mix that Jonathan mentioned from my report had to do with a shift away from so much domestic leisure and into higher yielding international and more business travel.
What is the constraint that they face? Is it not enough gates? Is it not enough pilots? Is it not enough planes ready to go? What is the constraint to the huge optimism you have?
Yeah, I think there's a lot of constraints that we see. First of all, the OEM delivery delays. United ordered all those aircraft, but when I asked them about timing of those planes, because if you look at the CapEx and you look at the aircraft orders and you look at when they're thinking of taking them, there's a huge mismatch. So obviously there's a contract, but I'm not sure because of supply chain issues, Boeing can actually make good on the contract. So we're thinking not all those planes are going to come when United thinks they're going to come, at least for the next couple of years. So OEM delivery delays, that's number one. Number two, labor. Everybody is well aware that we don't have enough pilots, and that could be changed. There are several ways that can be changed, but not in the short term. It will take a couple of years for training to catch up. And then third, air traffic controllers. We're seeing a lot of them retire, so we're not training enough. Even though the FAA says we're not, because it takes several years to become a controller, and a lot of them don't want to work in the busiest airports because the pay just hasn't kept pace with the cost of living in those cities. So you've got a shortage of controllers. I should say the airspace is still safe. It's not that it's unsafe. It's just that we need more controllers to be able to expand. And then finally, in terms of airport space, infrastructure on the ground, we don't have enough of that either. But airports are making good on their plans to build out.
Helene, which airlines do you think are going to be able to weather this the best?
Yeah, so United was our top idea, best idea for 2022, and we went with it again for 23. Delta, Southwest, I think the big airlines, I focus on all the big airlines. We downgraded JetBlue and Allegiant last week, but even American, which we have a market perform on, we think we'll be fine in the next couple of years as well.
Helene, how much are airplane tickets going to go up? I mean, it sounds like there's a confluence of things that are coming together to make the experience even worse and the price tag even higher.
Yes. So their tickets are going up. We think somewhere in the mid-single digit to low double-digit range, which sounds huge. But given that load factors are already between 80 and 90%, and we don't have as much capacity coming on stream as we would like to, as the airlines would like to see, but more to the point, we're flying almost as many people as we were flying in 2019 with 20%-ish less capacity. So that right away tells you that if we got back to 100% of 2019 levels, and as I said, we're within 5%, you'd need to see more capacity to be able to handle it comfortably, which you don't have. So there has to be either a shift in aircraft to bigger aircraft. So that would mean more seats per departure and perhaps fewer departures per day, which would solve the issue. But obviously you can't get all those wide-body aircraft in quickly. Or you raise ticket prices. That's the other solution. So that's what we see airlines doing. You raise ticket prices, and there's a subset of people who won't be able to afford to travel by air, and they opt out.
Are we anywhere near a government response to what are perceived, whether they are or not, sky-high airline prices?
I don't think so, because it's not only the airlines that are charging a lot of money. Hotel rooms are outrageous, as are rental cars. And our very good analyst on the hotel and lodging industry, Kevin Koppelman, has Airbnb as his best idea for 2023. And part of it is a shift away from hotel chains where rates rates vary so widely. You have no idea what you're going to pay week to week for the same hotel room in the same hotel. And so there's been the shift, according to him, away from some of those changes to Airbnb. And so that's his best idea. So Tom, that's what we see happening. We see a lot of demand for air. We see a lot of demand for people wanting experiences again. Everybody has enough stuff. They've bought enough stuff over the last couple of years. So now it's a shift back to experiences.
Helene Becker of Cowen. Helene, thank you. I think depressing for us and fantastic for them seems to be
Merry
story
Christmas.
Here. Is that it? Looking ahead to the holiday travel.
You'll never be able to travel
They're
again.
packing the planes that much. They've been able to cut capacity,
yeah.
but ultimately maintain the same level of passengers.
And by the way, you also pay that much more for hotels and rental cars.
Awesome.
It's going to be a great vacation.
We don't think we're going to see a congressional hearing over the fact I just priced. She mentioned United Airlines as her favorite pick. Newark to LA is a ratio of 10-1. It's $1,700 business class, and it's $180. It's like they're giving
Well, she
it
talked
away.
about high-yield passengers, Tom. You've seen what they're doing with the planes. They're making the first-class cabin, the business-class cabin bigger. That's what's been happening.
I guess that's the wall just comes back.
Yeah, you just
There's no other way I see this because my basic take is, and I could be wrong, I'd love to hear from all of you through media and Mr. Musk Twitter as well, but the bottom line is,
you think Elon's going to weigh in on this?
Yeah, Elon, if you're listening, weigh in on this. But well, I'm on the Gulfstream, but when I'm on the plane, I'm stunned at how people just will not fly economy. There's like a new thinking here.
You hang with different people than I do. That's all I have to say.
Well,
we're living in two different realities. I mean, we're looking
I don't think he's ever flown Spirit.
Yes, we have, and the kids were bribed with whether or not they got to purchase a can.
Well, you told us once.
Yeah, because you got to purchase it.
Yes.
Can I just say one thing though about the
You can say
congressional
more
hearing?
than one thing if you like.
There is not really a reason that I see to have a congressional hearing over the price.
Well, Tom
of
sees
going on
plenty of
vacation.
reasons.
However, there is a question around dividend payments at a time when the airline industry is cutting back in a number of ways and had to get assistance during some of the downturns.
Agreed.
And
Did
then
they pay back the money?
They're paying back the debt.
They are paying back money to the
the question
government.
is, do they need to have a bigger crisis buffer? And do they need to build that up rather than just deliver it back to shareholders in a way that does draw more scrutiny?
And this is something Robert Crandall's talked about for years, is will there be a change behavior in airlines? I'm not sure on that. You told me once, one of the airlines in Europe, they were talking about standing.
Oh, that was back in the day. That was a long time ago. That was a rumor around Ryanair. Do you remember that? Yes. You're going to stand and hold on to something and have this little thing to lean back on.
Would you do that?
I would have done it a long time ago.
I would do it.
Maybe 15 years
They
ago.
had a terrible Hawaiian Air, injuries over
that was
the weekend.
brutal, Tom. I saw that, yeah. I saw that. Stuart Kaiser's coming up next on City.
I can't get
I don't
in
think
the
Stuart knows what he's in
seats.
for in about 10 minutes.
They're doing.
From New York, this is Bloomberg.
The top names in business are on Bloomberg.
I think you have to assume that we have some bumpy times ahead, and you have to be a little bit more cautious with your financial resources, with your sizing and the footprint of the organization.
So what can you do near term? Test to make sure you see at the margin you can move things around, manage your expenses very carefully and invest in efficiency and effectiveness, but also continue to spend money where you have competitive advantage.
Nobody covers business like Bloomberg, your global business authority.
Every art institution I know of wants you to serve on their board, and you're very involved in the art world. What is it about art that attracts you?
Well, art is essential in a democracy, David. Art is so important. We know what art does to young people. We know that exposure to art brings about higher levels of empathy. It helps people understand how other cultures, other people live, and it just brings out the kind of humanity in all of us. There are times when I have observed leaders use language that is inhumane while talking about other human beings, while talking about the world. And I think to myself, this person has clearly never engaged in beautiful poetry. They've never listened to the words of a great playwright. They've never sat and reflected on a beautiful painting or picture. Because if they had been really educated, had they really been exposed to the arts, they wouldn't find it possible to use this kind of language.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. A lot's happening on Wall Street.
I'm quite encouraged. The center is holding.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights
A lot of these areas still have very, very good valuations.
from businesses most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot. We're talking about a significant hit to our standard of living.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
Given the fact that the economy is likely to contract next year, central banks ultimately will be cutting in the back half of next year.
The danger here is that central banks start to go a little bit too far.
I do think the Fed will continue to raise rates through the first quarter.
I think the market and the Fed are well aligned.
We've got 75 basis points worth of hikes left in the dot plots. I think you're likely going to see that, and I think you fight the Fed on this at your peril.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Aren't we all done with 2022?
Oh, so done.
I mean,
like,
like,
what,
you know,
July?
If Stuart Kaiser of City's come in, he's going to do this interview and go home. That's it, day over.
He's ready to walk out.
Day
after
over. I mean, he's
even
before the
we
interview even begins.
Exactly.
I know. Good morning to you. With Tom Keene and Lisa Abramowitz, I'm Jonathan Farrow. Futures right now positive, 1/3%. TK, you've talked about the dates on the horizon. Let's do it again. On the 6th, you've got payrolls.
Yes.
On the 12th, you've got CPI. Can I throw this out there as well? On the 13th, you've got JP Morgan earnings. And I wonder how many people think actually the 13th might be the more important data point going into
And
next
then
year.
on there 4, 5, 6 weeks into that big tech derby as well. The last 2 times earnings have done better than good. But I'm going to go to the 12th right now, John. And what's important here, and my observation this morning, folks, is a fancy moving average study. We are down to a tipping point of convergence. The last time we were here was spring of 2018, which is a bit ago, and that is the doldrums we're in, where we have to lean forward and listen to people like Stuart Kaiser.
Well, let's lean in and listen to Mike Wilson and Morgan Stanley as well. He published a little bit earlier this morning. Rates and inflation may have peaked, but we see that as a warning sign for profitability. Lisa, he went on to say, it's a reality we believe is still underappreciated, but can no longer be ignored. I'll catch up with Mike a little bit later this morning around the opening bell.
Awesome. I can't wait to hear what he has to say. He was saying in his recent research piece that he's leaning toward his base case, or his bear case forecast, rather, of a 22% further decline from here for the S&P. His comments, don't assume the market is pricing this kind of outcome until it actually happens. And perhaps I personally have been miscasting the rally that we've seen, the sustainability that we've seen in treasuries. Maybe it's not a repudiation of the Fed, but a girding for what's to come in terms of this earnings recession.
Equity futures right now up 0.25% on the S&P. I'll whip through this for you just briefly. In the equity market, we're slightly elevated here. In the bond market, yields higher by 3 basis points or so on a 10-year, 351.67. Euro dollar almost unchanged, positive 0.2% there, reclaiming a 106 handle on euro dollar. And crude 74.71, positive 0.6%, way off the highs of the year. But you know what the average has been this year, Tom? Crude, it's averaged $95. this year through 2022.
Yeah, we're down, and if we get a breakdown in support due to the demand issues and supply, we all know this story is, well, even if the long-run view is out over $100 a barrel, including, Blanche at Bank of America, Curry at Goldman Sachs, at Citigroup, they have Ed Morris, who says, yeah, that's fine, but we're not there yet. And he maintains this $80 level. That's an outlier.
He's pushed back against the demand story.
Yeah.
Lisa, this morning, a 74 handle on WTI.
Just this week, I want to run you through some of the data points before we get to next year. Lots of U.S. housing data. We have housing sentiment. We have, that's at 10 a.m. today. We get housing starts 10 a.m. tomorrow. We get existing home sales 10 a.m. Wednesday, new home sales on Friday at 10 a.m. This week, there's also a focus on the consumer, and really the key data watch is Friday. We get personal income and spending data at 8:30 a.m. How much do we also get a sense of the PCE, the core PCE? This is one of the key metrics the Fed looks at. Do we get a sense of a deceleration that's more rapid than people had expected in the inflation, or does it go the other way? This has been one of the biggest debates among economists. And then, of course, we also have the University of Michigan December Sentiment Survey at 10 a.m. On Friday. This week, and I really want to highlight this, we've been talking all about where does the inflation come from. It is the wage picture. There are planned labor strikes around the world right now. In the U.S., we have an Uber strike today. In New York, we have rolling Starbucks strikes. And then Friday in the United Kingdom begins an 8-day planned walkout. Heathrow, Gatwick, Manchester, Birmingham, Cardiff, and Glasgow airports, as well as a number of other transportation-geared employees. But John, you've been touching at this. Part of the reason why I guess that people are trying to get to the UK earlier than perhaps some of these shutdowns just theoretically occur, but it really highlights some of the pressures there.
Bramo gets personal so quickly, doesn't she? I am going home a little bit earlier than I anticipated because I anticipate that Heathrow, Tom, might be a little bit of a mess going into the weekend. Do you want to join me?
I thought about it. My biggest problem with the planes being so full is I couldn't get home. I'm not going away.
You couldn't return?
I couldn't return. I couldn't get the right plane.
Where were you trying to go to?
I'm going to leave the airline out of it. I gave them 7 cities.
And they just couldn't work it out
And they tried. They were great. There was no attitude that you can't
Did
get
you have
home.
a price in mind, though? Is that why?
Well,
they wanted
Francine
too
in the
much?
Gulf Stream. What can I say?
Right.
She's in Sicily or something on the Gulf Stream. And, I just said, I can't get home. I literally couldn't get home. I just booked March. There were 3 seats left.
For March?
March. Okay. Yeah, it's nuts.
Stuart Kaiser's
Helene
with us.
Becker's right. It's nuts.
From Citi. Stu, can you translate this? What is the jelly of the month? What is that? The Fed's jelly of the month gift. What does that mean?
You're not a Christmas vacation fan, I take it, John.
Can you tell us what the jelly of the month is?
The jelly of the month was a very disappointing bonus that was given to someone. So this was a disappointing
National
outcome.
Lampoon's Christmas Vacation movie.
Exactly.
Okay, he was building the swimming pool. I remember
He was going to build the swimming pool.
And then he didn't.
Then he got the jelly of the month. He couldn't build the swimming pool. So come March time, it was a very depressing outcome.
Can you tell us why the Fed delivered the jelly of the month gift and where you think this equity market's going because of it?
From my perspective, thanks for giving me a layup to start the morning.
Can I just say the chairman of the board of Bloomberg is watching this, and our days are so numbered.
Do you know what he's thinking? I know exactly what Peter's thinking. He's thinking, I like that movie too, John. Carry on, Stuart, please.
Isn't Tom like the guy out in the driveway?
Come on, Stu.
From the Fed's perspective, look, I think the most powerful thing they did was actually in the SEP and in the Fed forecast. A lot of people obviously focused on the press conference and Chair Powell kind of taking direct shots at financial markets. But I think the SEP was more impressive and impactful from my perspective, just because in November, you had a lot of divergence in views coming from members of the committee. And it seemed like they were able to all get on the same page for the SEP and kind of put out a very direct, pointed, and I think intentional effort to send a hawkish message to the markets and kind of convince people that we're going to be above 5, et cetera, et cetera. So I think the market was reading the divergence as kind of the doves starting to have a little more leverage in the committee, and I think the SEP, was a strong sort of refutation of that.
You nail where I have been for months, which you take your choice set of S&P 500 stocks down to 7% of the stocks, 35 out of 500. I totally agree with you. When you get into this malaise, this worry, these uncertainties, your choice set goes down. How do you prosecute that forward?
Look, for us is you start with quality stocks. You want to avoid stocks that are going to have negative revisions, that have credit risk, and that are too growth sensitive, basically. So, that's how you get down to 7% really quick, right? Not only do you want quality, but you want quality that's also kind of low risk at the same time. And that's kind of where we're pointing people to hide out to start 2023.
This is gospel, folks. Good morning, John Merceneau, invented Fidelity 50 Fund. When you get into stress like this, there's just not enough ideas out there to buy.
But is it stress like this? I mean, I guess that's one of the key questions. Morgan Stanley's Mike Wilson saying people are basically shrugging off the idea of this, getting more bullish heading into year end. Are you with him that the bear case looks like more of a base case now? Or are you with the others who are saying, actually, it's a dearth of optimism and it's the strength, the resilience that really is the highlight?
Look, I think the bear case has been in place for 6 months, right? I think we've been calling for these large earnings revisions for a while, so that's not new news. So I think to suggest that the market's not aware of that or prepared for that, I don't think is accurate. I think what's happened is you had a chief risk factor in the market. That risk factor was inflation, and it's come off the peak, and the market responded positively to that. I think as you get into 23. Peak inflation is a little bit becomes your number 2 concern, and you get into a growth discussion. So to Mike's point, I think, that's where the discussion, becomes how deep a recession, what is the impact on earnings, and what do we see during 4Q? I mean, if you look at it next month, I think there's 2 really important catalysts. One is January 6th, because I think the average hourly earning component of the labor report is going to be hugely important. And the second is what happens in 4Q. If 4Q is sloppy and you get a lot of negative guidance, that's going to really crystallize, Mike's bear case. If it's not, then you really do take a little bit of the starch out of that bear case if those earnings come in semi-clean. It's not our forecast, but if large cap tech came out and said, hey, we're making pretty good progress on these cost cuts and our margins are going to look pretty good back half of the year, then it becomes a much more balanced discussion. So I do think earnings and growth are the focal point, and we're just going to get a ton of information on that, in the middle of January.
Well, we've got information on the growth data at the moment. What do you make of that? Is there a risk here that this weakness call gets pushed out, maybe to the second quarter?
The growth call? I mean, look, I don't think people expect the quote unquote recession probably till 2Q anyway. I think the question is, when do you start to trade that? And the front half in January, if average hourly earnings are strong and 4Q EPS is weak, you're going to trade that pretty quickly, right? If those two things kind of come in a little more sympathetic to you, then maybe we're again having this discussion in April around the time they report 1Q earnings. And that's why I think those 2 events are so important to start the year.
Can I just say, great movie and fantastic note. Thank you. I don't know why I missed that, but I didn't get it initially, but I do now.
You're not the only person, believe me. It didn't go over as well as I hoped.
Stuart Kaiser of Citi. Well, it's going over well. I loved it. Great movie, Tom. You've got to watch that. You ever watch that?
Yeah, well,
it's a good one.
We got the big tree this year. It's like a real tree, John, with real lights.
With the squirrel in it.
You've put the
squirrel in there.
I'll put the photo back out on Twitter if I'm not banned yet. But the squirrel. No, it came with a squirrel, and we fed the squirrel, and the squirrel's afraid to get down because of vet bill and kennel fee.
So the squirrel's just
in the tree.
I'm sure.
Hanging out.
Maybe one of those animal cruelty organisations might be getting in touch. Never mind Elon Musk at Twitter. Dan Ives of Wedbush published in the last hour. He said it's time to end this nightmare as the CEO of Twitter. Of course, long-time Tesla bull. He goes on to say, from the botched verification subscription plan to banning journalists to political firestorms caused on a daily basis, it's been the perfect storm as advertisers run for the hills. Tommy goes on to say, with the poll closing this morning, it appears Musrain as CEO of Twitter will come to an end and thus be a major positive for Tesla's stock. Tesla's stock up by a little more than 3% this morning. If you are just tuning in, Elon Musk 12 hours ago conducted a poll saying, should I step down as the head of Twitter? I will abide by the results of this poll. Tom, you know the results. 57.5% said yes, 42.5% said no, and more than 17.5 million people, TK, voted in that poll.
Yeah, and Lisa, I think, nailed it. He had a margin call or whatever on Tesla. I mean, the mystery there of what is his financial structure.
I didn't say he did. I was just saying this was some of the speculation out there.
I misspoke there.
No, let's be very clear.
Excuse me.
But, there have been lots of rumors and speculation.
I stand corrected.
We're going to catch up with Matt Brill in the next hour. Looking forward to that. He joins us at 8 a.m. Eastern Time, portfolio manager at Invesco. Stuart Kaiser, thank you again. Sure. Loved this. Come back soon. Next year in 23.
This morning.
Oh, loving it. 2 more days to go. Almost year over. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. A crucial vote today in the House January 6th committee. Members will decide whether to recommend that former President Trump be prosecuted for obstructing a government proceeding and conspiracy to defraud the U.S. Bloomberg's learned the panel is also considering a charge of insurrection. Bloomberg's also learned that FTX co-founder Sam Bankman-Fried plans to drop his fight against extradition to the U.S. He's been locked up in the Bahamas since last Monday when he was arrested at the request of U.S. authorities. Bankman-Fried has been accused of fraud and other crimes. Well, in Ukraine, the government says that drones targeted the capital city, Kyiv, overnight. They say 18 of the 23 unmanned aircraft were intercepted, but some of the others damaged the city's power infrastructure. And shares of Tesla are higher on the prospect of Elon Musk potentially stepping back from Twitter. Investors see this social media company as distracting him from running the electric car maker. Musk tweeted Sunday he'd abide by the results of a poll asking whether he should step down as head of Twitter. 58% of the millions responding say yes. In Argentina, it was a rare moment of euphoria and happiness for a country battered by soaring inflation and political uncertainty. Fans jammed the streets of Buenos Aires after Argentina beat France for its third World Cup title. The victory was also a personal triumph for team captain Lionel Messi, who scored 2 goals. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
I do see growth slowing, and I do see the unemployment rate going up a bit next year as well. Again, but inflation is coming back down at 2. Right now, we're trying to move our policy in the way to get back to price stability, but in a way that minimizes the pain of the journey.
That was Loretta Mester of Cleveland Fed. She caught up with Mike McKee on Friday afternoon. I've always said, I think we've always said, the best part of this program sometimes is the commercial break. Just to hear AMH and Tadeo just arguing with each other from different locations and not even talking to us about whether that was a penalty.
They talk to each other. We don't
early in the
talk to
game
each
in the
other.
final yesterday. I mean, TK, what did you make of that? Tadeo's got thoughts.
Well,
Anne-Marie
we're going to
taking
talk
the
to
other side.
experts here right now, you know. I mean, you know, I don't know. We're going to get to it right now. I just think there's so much to talk about here. And what we're doing is not from Qatar or from London or that, but we're going to give you
Brussels
our
and DC.
World Cup coverage from Brussels and from Washington, D.C. Anne-Marie Harden. And we are honored to have joining us Maria Tadeo, truly gave us our high point of these high point World Cups. Just extraordinary. Maria, I've got to start with you. To me, something happened yesterday that I don't think we ever would have seen in American sports. The French coach took 2 stars out early in the game in the 41st minute. You would never see that in American sport, Maria. What did that signal to you as the French asleep finally woke up?
Well, the first half, they were completely out of the game. For me, it's not the 2 stars that the French had to put on the bench. The real star was Di Maria. Oh, my God, he broke that game. He was so fast. The pace, the strategy, it was very, very well done. And that's why he scored the second goal. Now, we can debate about whether or not it was a penalty or not. To me, that is beyond the point because yesterday, that was a final for the ages. This is what football is about. It was the energy, the passion. Honestly, I've had no sleep. It was one of the best games I've seen in my entire life. And I watched, and I have been watching since Korea, Japan. So believe me, I've watched a lot of games and shed many tears over them, by the way.
We've all noted your lack of activity at Bloomberg. Maria, let me cut to the chase, which is, will this change how soccer is played? Will this change the style of play that we saw? Will it change how Spain or the Tots move forward?
Look, I think what it shows, it's maybe time for humble pie for European teams and European clubs. There is a lot of talent in Latin America. This was going full circle. Messi, back to Maradona. Argentina had waited 36 years for this moment. The country, the people, if you ask me, absolutely deserve it. I think there's a lot of questions going forward, however, about FIFA and how the nominations get awarded. I think there's a lot of questions around the management of FIFA. And the other takeaway, actually, that to me is very interesting, is the fact that we're here on U.S. TV and we're talking about football. I mean, that is a big deal. You guys finally get it.
Okay.
This is the biggest sport on earth. It's a beautiful game. Time to catch up.
Maria, all right, we're done now on that one. And Maria, you have a quick rebuttal. Go ahead.
Well, to Maria's point, I think Di Maria, everyone said this was Messi's World Cup. Di Maria, who, by the way, plays for my beloved Juventus, this was really his game. The one issue I have is that first penalty I thought was so soft. And in the end, if you look back,
I don't agree.
It could have been 2-1. And Mbappe scoring 2 goals back-to-back in 1 minute and 33 seconds. And that one touch on the second goal was just incredible. And he's so young and he's such a star. But what's interesting is they're both going to be playing together in less than 2 weeks.
Yeah.
Mbappe and Messi. So excited for the return of the club sports.
I hate shifting gears, and I know that you
You're
guys
going to actually shift out of this?
I don't think I can, actually.
We've never had ratings this high.
Hold on a second. All right. Let's see what this works, okay? Anne-Marie, we are preparing for a U.S. World Cup, right? That is the next World Cup. It is going to come to the U.S. It is also a lot of time in between now and then. What are you watching as we hear all of the weekend shows? I'm trying. Over the weekend shows, we heard about Biden doubling down on his presidential election. We heard about how there are more victories there that perhaps other people are not accounting for. What are you watching?
This is a fantastic pivot, Lisa. So listen, this entire week, besides the fact that they have to reach a spending agreement to make sure that they avoid a shutdown, today and the rest of the week will all be on the January 6th committee. It is their final report coming out today, and what we are expecting is referrals for criminal charges against the former President Donald Trump. We have never seen a former president get these kind of charges. And while they don't carry a ton of legal weight, given they are referrals, you see him slumping in the polls, not just against if it were to be Ron DeSantis
Anne-Marie,
for the GOP
I don't mean to interrupt, Anne-Marie, but help our international audience, including me. Doesn't all this go away when the Republicans take over the House?
Well, that's not the issue. The fact is, a lot of this doesn't carry a ton of weight, right? Unless the Department of Justice picks up that baton. But what it does do is that it just further adds the pressure on the former president about carrying the mantle for this Republican Party. It was clear after the midterm elections that his candidates did not do well. And if this Republican Party wants to make sure that they have independence, which we always see ends up being the group that moves the tide either way in presidential elections, that he will have to be the one potentially to exit.
And now the toughest pivot in the history of Bloomberg surveillance, John Farrow here. Pivot from football over to the January 6th. Which way do you want to take this, John?
I will just say that was one of the greatest commercials for the sport that we've probably ever seen. 4 years ahead of this sport being hosted right here in North America, in the US, in Canada, and in Mexico. I think it's absolutely fantastic. The one missing link in this game and the supporter base of this game has been this country, the United States of America. It is the world sport without a doubt. And I think yesterday, Tom, went a long way to recruiting a lot more fans.
You go to Maria on this, but the thing you taught me that was so evident yesterday was the clock moves, whether it's Preston North End versus Queen's Park Rangers or it's a World Cup game, the clock moves, and I watch American sport now, baseball and football, and it's like slow motion.
Well, let's compare the NFL to international football.
Here we go.
I mean, these are just the numbers. These are the stats. The average distance ran by the average NFL player, TK, about 2 kilometers across the whole game. Across the whole game. The amount of time in motion, about 11 minutes on average for the average player. That's ridiculous.
Okay,
11 minutes, 2 kilometers.
Hold on a second. I don't think that we're measuring sport necessarily by how far.
No, but we're talking about momentum and continuous play. The level and degree of intensity across a certain amount of time is much, much higher in international football.
I'm not going to cast aspersions on any sport of any type. That said, I will say that football or soccer has gained a lot of traction in the U.S., partly because younger people have opted to play that because it is less impact, and particularly with the head, than other sports. And the parents have been a big player. So that's one reason why it's gaining traction, and I think that you're right.
Maria, I don't know if you're still with us, but Maria, what is it like at PSG? Is this true, John? Messi and Mbappe are together in days?
And Neymar. Well, it's going to be interesting to see what happens with the Argentinian players. They're going to go home in the next couple of days. It'll be interesting to see what happens.
Maria, what happens in European football in X number of days?
Oh my gosh.
Look, I think you go back, you enjoy it. Argentina, they won. Congratulations. By the way, we have a lot of viewers in Argentina because yesterday my phone was blowing up. I will go to Buenos Aires. I made that promise I will do it. So yes, you have my word. And then secondly, what happens? You go back to playing together. And I guess the bottom line, when you look at a team like Paris Saint-Germain, it's not really even how can they compete or work together, is will they ever play Champions League? And the reality is, if Mbappe at 23 wants to really have that glory, he should have moved to Real Madrid, but now it's too late. That is a problem. When you're 23, you should not care about the money. It's the glory. That's a lesson for everyone out there.
From a Madrid fan. Okay, Maria, thank you. Maria today, alongside AMH, the two of you, just wonderful, as always. The fact is, I can sit back out of these conversations now, and you guys can just go at it for 5 minutes on my sport. That's a beautiful thing.
You taught me this. What do I know? But
you're deeply engaged in it now.
I just think it's great. I just think you and Maria in 4 years providing surveillance coverage across, and to be clear, this is 3 countries and X number of cities, even though it ends up like yesterday in New York City.
We've seen a lot of this over the last few years, Tom. We've seen a lot of this, and Maria mentioned Tokyo, South Korea, Japan, South Korea back in 2002. It's not the first time we've shared a World Cup across different nations.
Junket, Maria can get to Buenos Aires tomorrow for $4,321.
From
one
Brussels.
Stop. KLM.
Is that coach?
Team coverage. Maria Tadeo from Buenos Aires. That would be great. We should do that.
The future's up a third from New York. This is Bloomberg.
Welcome to the world of decentralized finance.
I'm going to take a look right here at regulation.
We are seeing digital currencies under some pressure.
Bloomberg's covering all things crypto. The people.
I want to have some of my money outside of the sovereign.
The transactions.
This is a simple case of where did the money go?
And the technology.
If people wish to invest in it, they must be prepared to lose their money.
I am still very positive on real utility into this space.
Bloomberg Crypto, Tuesdays.
This just in from a Bloomberg subscriber. Surveillance sports with a proper intro splash screen boom. That's the pitch for 23. You ready to go?
Oh, well,
you ready for that?
Yeah, but I'm going to say this, and, we talked about sending all of us to Qatar, and we didn't do that because of the Fed meeting and inflation and all that.
It was Powell's fault.
The value add of what you did and Maria Tadeo did, I learned a lot.
Me. Tadeo was fantastic.
I think it's cultural, and you two really had a massive, massive value add.
Futures right now up 1/3 of 1% on the S&P. On the Nasdaq, positive 0.4 of 1%. A lift here, 3-day losing streak coming into Monday. Can we break that? 2 weeks of losses as well on the S&P 500. In the bond market, 2-year yields last week lower in the face of a higher dot plot from the Federal Reserve, helped out by perhaps CPI delivering a downside surprise, though I have to say by the end of the week, we'd totally forgotten about that CPI print.
Yeah.
Totally, Tom. Totally forgotten it.
Focus on the markets today and the doldrums of the markets, but we do have to reset and really recalibrate off of the economic data we have on this American economy into important meetings in January. And John, I just think that, we're going to have to really step that up in the coming days.
Yields up this morning by a basis point on a 2-year, up 5 on a 10-year. I'm with you, Tom. And the calendar on the 6th. On the 6th, you get payrolls in January. On the 12th, you get CPI. And I keep going back to this, the 13th.
I'm selling the week here.
JP Morgan earnings on the 13th, with so many people looking ahead to a weaker earnings, a weaker quarter of earnings. This from Bank of America and Savita Subramanian. She published this on Friday. It's not your mom and dad's recession. She went on to say, Tom,
I like that.
Oil companies have capital discipline. Then she said this, and this is where I think it's interesting regarding the banks. Credit risk may be more evident at venture capital, private equity, and long-duration growth plays than at regulated banks. She said this isn't just a narrative. TK, it's showing up in the data. So with the relative underperformance, outperformance story of a recession, the call's going to be different this time.
I think that this is important. It started with Ed Hyman a couple days ago and his observation on M2, and, the liquidity issues are there. They haven't gone away. That I know for certain. Are we going to do equity movers here? Do we have individual names?
And it relates actually to this idea of venture capital and what's going on. I'm going to take a poll, and it seems like the poll said that Elon Musk should probably leave as CEO of Twitter, and Tesla shares have been flying as a result of it. What I wanted to do is actually just look year to date of Tesla shares to piggyback on what we were talking about. So far, those shares have underperformed the other major automakers. You can argue it's not a fair comparison, perhaps, but the question is how much of a risk premium has been baked in? I'm saying, okay, but I'm saying how much of a risk premium is baked in because of Elon Musk's distraction? It's a serious question that Dan Ives has been asking. You've seen Ford down 39% year to date. You see General Motors down 35% year to date. Of course, Rivian down 78%. But again, that's another story. How much can you really conflate these stories is a question. Right now, you're looking at Tesla shares that were up more than 5% at one point ahead of the open. Now, if we take a look at where Tesla is trading, you can see it's up 3.25%. But John, you've been raising this issue, and I'm glad that you have, because it really raises a question. Can you see a rip here if Elon Musk steps down and focuses on Tesla, or are there some other fundamental demand issues as well as supply chain issues?
Well, we've got to get past the if right first. And if he steps down and abides by this poll, he said he would, and we'll find out if he does a little bit later today. I think the stock price move you bring up is pretty clear in the pre-market. There are people out there who believe that if he steps down, it's positive for Tesla. I'll catch up with Dan Ives of Wedbush a little bit later this morning. I think we'll do that around 9:45 Eastern time. He thinks this is a very big positive, Tom, for the name. If we can get Elon Musk to focus less on Twitter and more on Tesla.
Tesla, 26 buys, 13 holds, trophy taken from BNP Paribas and JP Morgan among the major banks. They've done the best job.
Who else are you talking to? Lionel Messi?
No, Messi's not coming on. Mike Wilson is, if I could tease that again. Morgan Stanley, 9:30 Eastern time. We'll do that. Looking forward to it.
Mike Wilson could probably run Argentina now that I think about it.
We're doing the greatest hits promo just to close out the year.
I know.
I'm away from Thursday. Just catch up with the with some of the greats out there on Wall Street have made great calls this year.
It's true. You're right. You're right.
Yeah, it's good. Are we done?
We are.
Go ahead.
Very much
Right
done.
now, joining us, Dana Peterson, Chief Economist at the Conference Board, and she is our first conversation of the week to really recalibrate on this American economy. Dana, do you need to retweak things? I mean, has the economic data been soft enough where the Conference Board has to recalibrate?
No, we don't need to recalibrate. Indeed, the data are consistent with what we've been saying for months, that the U.S. probably started to enter into a recession at the close of the year, maybe early next year. We still have a recession call. We're probably going to see about 3/4 of negative GDP growth. And certainly the retail sales data are telling us that. And the stubbornness of inflation also doesn't bode well for the consumer outlook.
Well, okay, I want to go there. The consumer outlook versus trade dynamics. Are trade dynamics the kind of thing that can single-handedly put, let's call it a flat America, into an economic contraction?
Well, the thing is that, well, certainly, yes. Global trade U.S. trade to the rest of the world is probably going to be weak because Europe is certainly slowing, probably already delved into recession in the fourth quarter. We're definitely expecting a recession for Europe in the first quarter. Most other economies are either slowing or entering into recession. So certainly exports don't look like a good option for the U.S. And certainly even imports, that could be somewhat of an offset. We think that imports are probably going to be lower in the U.S., so it's going to be a tug of war there. But certainly inventories are probably going to be negative going forward and not providing any impetus for the economy.
Dana, when I hear consumer confidence, I look at the average gasoline prices across America because that basically has tracked pretty closely, more so with University of Michigan than the Conference Board. And I'm looking right now at gasoline prices on average in this nation, $3.14, the lowest since July of 2021. However, we did hear that this administration is planning to start restocking their Strategic Petroleum Reserve in February. How much will higher oil prices, higher gasoline prices, affect the consumer confidence level? How direct is that correlation?
Well, it's not so direct in our headline measure, but it certainly does show up at our inflation expectations gauge. But it's not just gasoline. Consumers are paying more for food and for shelter. And so combining these things together, consumers are certainly less upbeat, and they're very concerned about the outlook. And what's really telling is that in terms of expectations, they're concerned about business activities, which is certainly negative for job prospects. They're concerned about employment in the future, and they are concerned about their personal finances. So once consumers think that they might get fired, that can usually end up causing people to spend less money. So it's not just the gasoline component, it's all these other pressures on the consumer.
There's some big dissonance here. We're talking about a lack of consumer confidence. We're talking about the potential for recession in the first quarter. And then we're talking about airline tickets that are flying to the moon and airlines being able to charge whatever they want and packing people in with 100% capacity and feeding them nothing. There's a question about what's wrong here. Why do people still seem to be spending if they don't have that confidence?
Well, the thing is that spending has certainly shifted. Folks are not buying durable goods anymore. Why? Because they're not stuck at home, and also because it's much more expensive to finance things like cars and furniture. We are also seeing people spend more on services, but the services that they're spending more on are those experiential things like going on vacation that they couldn't do over the last 2.5 years. And so we are definitely seeing inflation rise there because there is demand. But when you think about how people are paying for this, credit card use is skyrocketing. And so that means consumers have run down a lot of that excess savings, and they're not using their income. They are using credit cards. And so some of this is a bit dangerous and suggests that consumers are probably going to pull back.
With that analysis, can you extrapolate out a timeline of when the consumer finally slows? Because the answer is we've been wrong all year on the gloom crew. The consumer's going to slow. They haven't. But can you make an informed guesstimate, or is it just a complete mystery?
Well, the thing is that you could point to the November retail sales data. Now, granted, some of the retail sales might have been pulled forward into October because you had massive discounts and you also had some concerns about supply. But in general, we could potentially see very weak sales in December. In fact, our own survey for the holidays suggests that many people were going to spend less money on gifts and more money on things that they need, like food. So if they're spending more on food and not gifts, that doesn't bode well for December. And certainly when we look at the future, the first quarter, all that momentum is probably going to be gone. What are people going to be spending on? Certainly if they already bought everything that they need, they're not going to buy a fifth or sixth car, and they've probably already gone on vacation. So I think that we're definitely going to start seeing negative readings on consumer spending in the first quarter.
Dana Peterson of the Conference Board. Dana, thank you. There's a call for you, Tom. Q1, negative readings on the consumer as soon as Q1, which is basically the point that I think Mike Wilson and Morgan Stanley's making. This is coming sooner and harder than you might appreciate.
But didn't we have those same predictions X months ago?
We did, and they didn't develop.
I mean, I don't have a strong opinion on this other than I get certain pockets will be small, less buoyant and all that. I get, but I have trouble with certitude about what 70% of the economy is going to do.
Look, we had massive fiscal transfers in the pandemic, huge, trillions, and one of the biggest calls going into next year is whether that cushion evaporates, Bramo, that the resilience of the US consumer goes, or whether they just lever up.
Well, that's the issue, right? So Jamie Dimon has said that he expects that buffer to be down by the middle of the year. But they're already levering up. You're already seeing credit card accounts rising in terms of the amount of debt outstanding, as Dana Peterson was just saying. Why not just keep going, right? I mean, if banks want to lend and have the capital, how far can that go before they start to have to retrench it and actually pay it back? It's a key question, and she's saying they're going to hit a wall at some point.
So what's the risk here, that this weakness gets brought forward or pushed out? I keep asking that question. I get different answers.
The risk to who? The risk to stocks or the risk to the economy? The risk to stocks is that it gets pushed out. And I would argue that the risk to the economy is similar, because if you have it pushed out and you have people levering up for longer, that means the excesses built up at the sort of twilight of this era could potentially be problematic.
There are lots of people who think the final hike of this hiking cycle is the February meeting, Tom, from Chairman Powell.
Yeah.
Plenty of people believe that.
Yeah, I mean, it's part of the debate that will take us to the Fed meeting. I believe it's February 1 and the data points before that. But what I really like about Mike Wilson's analysis, would everybody get off the parlor game and start looking, as you mentioned, the kickoff of J.P. Morgan. What's the date, January something?
13th.
Yeah, okay.
Day after CPI.
Day after CPI, we get J.P. Morgan out, and then we're off to the races. And revenue's going to be terrible. Well, show me.
Every time the bank CEOs talk up the prospect of recession, and they come out with the numbers, and it's like not there.
I'm like, okay, I'll wait.
You're going to wait. You're going to be at work that week.
Yeah, I think I'll darken the door.
Are you cooking this weekend? How's that working out?
I bought a ham. That I had to refinance to buy the ham. It was outrageous.
So the Christmas dinner is a ham.
Yeah, we're going to have roast beast, but we're not going to have roast beast. We're going to have a ham.
Nice.
That's the Grinch.
You're going to send us pictures?
Watch the Jim Carrey movie.
I've seen that. Yeah, well, there's several versions of it, Tom, but that's a good one.
I like that.
Really into Christmas movies.
I am.
Me
Cheer
too.
up.
Me too.
Sensitive.
Futures up, a third of 1%.
Home Balloon.
This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Bloomberg's learned that FTX co-founder Sam Bankman-Fried will end his battle to stay in the Bahamas. He plans to drop his fight against extradition to the U.S. to face criminal charges. Bankman-Fried has been locked up in the Bahamas since last Monday, when U.S. prosecutors accused him of fraud and other crimes. He'll appear in court next week. There's a suspicion that China is hiding the true scale of fatalities from COVID. More than a month after a huge increase in COVID cases, China has reportedly only 2 deaths. That defies the experience of other, more vaccinated places with better resources. The European Union has filed an antitrust complaint against Facebook parent Meta. There's concern that it's unfairly squeezing out rivals for classified ad services by trying the Facebook marketplace over its own social network. Facebook says those claims were without foundation. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
not get stronger that moment that you're lifting the barbell. You get stronger as your body is making repairs, making recovery. Recovery is when and how you get fitter, faster, stronger.
Recovery technology includes everything from massage guns and foam rollers to compression boots, hyperbaric chambers, cryo chambers, infrared saunas, and even infrared pajamas. And athletes are partnering to become investors to take those products mainstream.
When you look at tech in sports right now, it's completely innovating the way training's going, completely changing the way recovery's going. I think sky's the limit as far as where it can go.
But while some of these products can feel amazing, it can be difficult to differentiate between what really helps the body and what just tricks the mind.
Every time you're chasing the latest, greatest, newest tool, you're probably chasing a mirage.
Good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, China Open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power.
This is Bloomberg.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Put out this assessment that there's going to be potentially a 30 BCM shortage. I actually think that's on the more optimistic side. On the brighter side, let's take that IEA assessment, but I'm not feeling as optimistic. I would say there's a whole lot of room for additional shortages.
That was a great conversation with Olga Kokova there, the Deputy Director for European Energy Security at the Atlantic Council Global Energy Centre, looking ahead to next winter in Europe as we try and advance through a tougher winter, increasingly so, over the last month or so to close out 2022. Just a brief sneak peek at the market action for you. Yields are higher on a 10-year by 5 or 6 basis points. Your 10-year still in and around 350, kind of hugging onto this level over the last couple of weeks. That's your 10-year. Equities are up by about 1/3 of 1%. Euro-dollar stronger on the euro side against the weaker dollar. Euro-dollar 106.07, but we've still got one eye on what's happening in the European bond market. Yields higher again through the whole of the Italian curve. Tom, it's been quite a move since President Lagarde spoke. And I have to say, we joke about the ECB news conference. The ECB news conference was the news conference to watch last week, without a doubt. Without a doubt.
Oh, yeah, without question. And again, what's so difficult there, and I do understand public officials there softballing it, but unmentioned is the war in Ukraine. And to me, any analysis is overwhelmed by that.
Officials this morning at the ECB talking up another 50 basis points from the European Central Bank. So now we've basically got a base case of a recession from this European Central Bank into a new year, Tom, and they want to keep on hiking. They want to keep on going.
Do they have the nominal spirit to be able to get away with that? That's the heart of the matter.
We're going to find out pretty soon, aren't we?
And the conceit is America has that spirit. And again, we'll find out on that as well. What we're going to do now is a public service, particularly for Americans distant from Europe. My eyes have glazed over recently over the price cap debate. Lisa and John have been much better about this than me. It's over there. We don't have to worry about it, but it would be nice to talk to somebody who's actually an expert. Tracy McKibben joins, founder and chief executive officer of MAC Energy Advisors, which barely describes her competency with the White House on energy matters and also much other work, including at Citigroup as well. Tracy, good morning to you. In a nutshell, will these caps work against Mr. Putin?
So good morning. Good to be with you. Well, with the meetings happening today, third time's a charm. They've been going at this for a while. Clearly behind their efforts is around sending clear signals to Russia about their displeasure and disagreement with his invasion of Ukraine. Will it work? They're going to try. It won't go into final action until next year. So they'll use, if they come to agreement today, they'll use the next couple of months to look at sort of the impacts, both negative and positive, of what these caps will do. So they're hoping. This is the mechanism. There's several delivery channels you can use. Countries have used, the U.S. have used one. This one is they decided would work best for the EU, so they will see if it works. This is where they think the best impact and best compromise between the different views of the countries in the EU has led them.
With Tracy, with all of your experience in studying EU hydrocarbons for the White House, for America, when all that is said and done, is this a system, and I mean the business system, the distribution system, as you say, of nat gas and other petroleum products, where there's enough leakages, where this is just, as you say, hope, and that's all it is?
So the interesting thing about the EU is it is different from the U.S. because there are borders, and so they don't have the ability as we do in the U.S. And so as they make these decisions to try to bring unity among the countries, you've got, sort of those who are anti-market interference, like Germany and Austria, and then you've got those who, have fiscal capacity challenges and concerns, like, Poland and Greece and Italy, who do want to see a mechanism that allow them to be able to be more unified. There are three aspects I want to make sure that you understand of what's coming out of this. In addition to the price cap, there is the ability to pool supply so that they do have a stronger voice. The concern for countries like Germany is that if they agree to a price cap, it will be sold somewhere else. And so as individual countries try to compete for the purchase of gas, they will be, the highest bidder will go. So they've included this mechanism to pool their ability to buy supply, in addition to their support for renewables, for the more longer term view of how you address this energy security, energy independence, and energy supply question for the EU.
Tracy, I got to think that next year in February is going to be a really interesting moment because you're going to have some of these price caps go into effect. There's been a question about whether any Russian oil has been really taken off the market or just funneled through other venues, and whether this will actually cause a new restriction. You're also getting potentially the repurchasing of crude supplies in the United States by the U.S. government to refill the Strategic Petroleum Reserve. How does this manifest itself in pricing and the potential for some sort of increase that perhaps comes suddenly, despite all of the telegraphing ahead of time?
Yeah, so again, these mechanisms, that they're going to use this period over the next couple of months to review what the impact and the best way for this to work. And as you said, February is going to be very telling. You'll be well into the winter. So I think the earlier session was talking about, everything is unknown as long as the Ukraine war goes on. And that's certainly the case with the EU. I mean, the U.S., as you mentioned, are, currently out buying gas. And so for the EU, how this will best work as they look at, again, it's going to impact, emissions trading capacities and abilities. But I think what they've done is they've tried to set it where it will also take into consideration what's happening with LNG, right? So I think the current view is that it's 35 euro per megawatt hour above whatever the price is set for EU. So they want to build in some flexibility. They haven't come out yet where the floor is. They've gone anywhere from 160 to 275. The latest I heard this morning is they're trying to end up around 180. So I think depending on where they set that price, they will be able to determine what the impact will be. I mean, as you've seen, the price has been moving around even as the war has continued in Ukraine, even, going down. So this is a very dynamic market. And so they want to give themselves the ability to, over the next couple of months, to decide what's the best mechanism for them to set this up.
Tracy, thank you for your perspective. Tracy McKibben there of MAC Energy Advisors. Tom, do you remember when people thought, A, this wouldn't happen, then B, they thought maybe a month? C, some others thought, 3 months, 4 months, and here we are 9 months into this, going into a new year.
Going into a new year, and I think the theme here is that the war gets ever longer. I like what she said there with her distribution knowledge about how Europe just flat out is not the United States. And to me, my amateur take is it's about all the leakages that can be within the system.
A different backdrop. Let's get to a different story. This from Senator Warren, writing a letter to Tesla's board. Tesla's
I thought it was to French soccer.
I'm going to bring you some of the reporting from the New York Times that Senator Warren the Democrat of Massachusetts, quote, is taking aim at an issue with more serious potential legal consequences, whether Mr. Musk has created a series of conflicts of interest with and misappropriation of resources from Tesla, the electric car maker he also runs. This piece quotes this letter. Quote, as you know, it is the legal obligation of Tesla's board to ensure that its CEO is meeting all his legal responsibilities and serving as an effective leader. Essentially, according to this piece, Lisa, Senator Warren is asking whether Mr. Musk's diverting of resources from Tesla, it reads, including software engineers and senior executives, is harming the car maker, which is a question that I think we've all been asking over the last couple of weeks.
Yeah, although I will say that I don't know that the securities issue and the board issue is really the domain of Congress necessarily or Senate. However, it highlights how perhaps the focus is on the public entity because Twitter is private. And it really raises a specter of who the next owner of Twitter, who the next leader of Twitter will be if Elon Musk does step down. And if you end up with a vacuum of power, does it become a public company again? Does it become in the crosshairs of this Congress?
There is a suggestion here, Tom, in this piece from the New York Times, that Senator Warren is suggesting the possibility that Musk is intentionally shortcoming either Twitter or Tesla to benefit the other. And I guess that's a conversation that will be ongoing.
Yeah, I just think it's there. I thought you guys have parsed it very much this morning. I suppose you could even bring SpaceX into this, but what I mostly look at here is just failed experiment after another as observed in the market, whether it's the price to sales ratio of the Twitter takeout or the price of Tesla, which is there to behold every day.
Well, do you think that this is actually a larger issue, a larger question, a larger investigation?
I don't know. It's a simple answer. I've got no idea.
But there have been questions about this because of some of the reliance on Tesla and its supply chain and potential consequences and fundraising and all that.
That stock is up in the pre-market still by more than 3%. We heard from Elon Musk this morning off the back of that poll?
Nope, not yet.
Not yet, not a word. Futures up on the S&P by a third of 1%. This is Bloomberg.
Nurturing also can come from men, and it's one of the qualities, I guess, that you found in your mentors that also pushed you up. Do we need even more nurturing post-pandemic? Is the way that we talk with employees going to change?
I think talent becomes the single biggest differentiator of a successful entity versus an unsuccessful entity. So you've got to do everything possible to hire, train, retain, put your arms around talent. I mean, you really got to focus on your talent. In the past, it's always been give them money, show them that they have an upward mobility and can make even more money, and that's the only reason people come to work. I think post-pandemic, we're seeing more and more people say, I have to worry about me as a person, I have to worry about my family, I want to worry about my well-being, my mental health. So we've got to start encompassing people as holistic humans as opposed to a tool of the trade, which means that we have to engage with them head, heart, and hands, not just head and hands. The heart has to be engaged. So we have to show more empathy, show that we care, that they're citizens of the community, they're members of the family, and all of those have to come into consideration as we help an executive or an employee. Be an employee and be a person of the community and the family. The stakes are higher.
The top names in business are on Bloomberg.
I think you have to assume that we have some bumpy times ahead, and you have to be a little bit more cautious with your financial resources, with your sizing and the footprint of the organization.
So what can you do near term? Test to make sure you see at the margin you can move things around, manage your expenses very carefully and invest in efficiency and effectiveness, but also continue to spend money where you have competitive advantage.
Nobody covers business like Bloomberg, your global business authority.
When I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it, building it, building it. You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Economic data are suggesting that a global recession is likely into 2023.
The trade that causes the most pain to the most people, and therefore might be most likely, is a later recession that happens to be deeper.
There's a concern about a recession in the U.S. To me, those concerns are a little bit premature.
It's going to be a mild recession. I do think the Fed will continue to raise rates through the first quarter.
Anything the Fed says right now is going to be not that impactful on the market.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on radio and television. It is a different Monday in New York. We are looking at economics, finance, and investment. We'll do some soccer talk here again, as we did with Maria Tadeo earlier. But I think what we got to do, John, within this odd week before a weekend Christmas, is frame out what it means as we reset for January.
Mike Wilson of Morgan Stanley has said it repeatedly over the last couple of weeks that it is no longer about CPI and the Fed. He calls it yesterday's news. It's all going to be about earnings. And I think the call for the first half is this idea that the earnings story gets a whole lot weaker and the first half of trading next year is going to be a whole lot tougher. That seems to be the consensus view into 23.
Maybe a consensus view. What I love is what Stuart Kaiser said from Citigroup, which is that when you're in this, as I say, doldrums, you narrow down your selections. To be diversified now, to run pro-money now, really challenging.
Well, clearly, if you're at the index level, Tom, how diversified are you on the S&P 500 when that big weighting has been to big tech, and big tech has had big problems this year?
He's looking at 35 stocks out of 500, which is 7% of your weighting on S&P 500. You can't do that math, folks, with the Dow Jones Industrial Average. Lisa, we're going to have IG chat here in a moment as well. What have spreads done here? They're not in the doldrums, right?
By the way, was that his holiday gift that you're basically giving a nod with the Dow?
No, I think
just
to be clear, no, I think we are both on the same page when it comes to that index. I think we're in agreement.
Wow. Okay.
Well, we are in agreement.
Well, we could celebrate that.
I got him a thesis from Vanderbilt that I found. You know, you can do a PDF print of it, and it's the history of the Dow.
So you asked me.
I respect the heritage of it, and Tom respects how flawed it is.
What's going on here? This is like everyone just loves
Christmas, Bram.
It's still the third rail of what people look
evidently.
at.
All right, so to answer your question about spreads, actually, one of the most interesting stories that I saw over the past 24 hours, high-yield bonds have been sold at the slowest pace in the U.S. this year, going back to 2008. And here is my question heading into next year. At what point does the stasis, does the complete lack of action in credit markets matter with respect to companies needing to raise money?
We're going to get to credit here in a moment, but John, we've got to go to what you've been talking up here all morning, which is the polling of Mr. Musk. I think the whole thing's ridiculous, but to the point, it has moved Tesla. That's a fact.
It has. So if you're just tuning in, Elon Musk yesterday evening conducted a poll. Should I step down as the head of Twitter? I will abide by the results of this poll. We'll see if he does. Yes, 57.5%. No, 42.5%. 17.5 million people voted in that. And when we all logged on the Bloomberg this morning to look where Tesla was trading, Tom, in the pre-market,
3-4%.
It's up. It was up by about 5%. It's now up about 3%. And the long-time Tesla bulls, the likes of Dan Ives of Wedbush, have been calling for this for a while, Tom. They're happy with the news. They would like to see him focus on Tesla and not on Twitter. Other people will have different views. I'll catch up with Dan a little bit later this morning.
Oh, you have Dan Ives on as well?
In about an hour and 45 minutes,
Let's hear 9 o'clock looks very strong
Mike
this
Wilson,
morning.
9:30, then 9:45 we'll catch up with Dan.
We've got Matt Brill coming up. Let's look at the data right now. It's an equity lift, but I really want to emphasize, John, my data check is 3 moving averages, which converge to a point on the Standard & Poor's 500. First time I've seen that since in the vicinity of spring of 2018.
I'm going to gloss over bonds, which are up today. Yields are up by 6 basis points to 354. Treasuries are down. In the FX market, I'll gloss over that too. 106.07. Positive on that currency pair by 0.2 of 1% on euro dollar. And I'll sit on this crude, WTI. Around 75 on WTI, up 0.5%. Talked about the average. The average so far this year has been 95, which tells you how elevated and how persistent the elevation has been through much of this year, Lisa, until we got to about the last couple of months.
Which also shows how next year there can be a triple-digit average, like a $100 average. That doesn't mean anything for where prices may be in any given month.
Well, you asked the question, do we have a new floor? I saw that question in Barron's as well over the weekend.
Yeah.
It's a good question to probe.
Especially,
do we have a new floor? Because now we're starting to think about China coming back in, the SPR being refilled.
Exactly. I mean, that's why I'm wondering, especially because all of this is happening early next year at a time when potentially you could also see a rollover in terms of the economic growth.
And particularly with Barron's, with their history an homage to the Dow Jones Industrial
I've noticed that
they've done as well.
They're very good at that. Do you think there might be a Dow Jones connection?
There might be a Dow Jones connection there. Right now, we're going to spend 4 minutes with Matt Brill of Invesco on a day job, and then we are going to wander over to his good experiences at the World Cup. He greets us this morning. For those of you on radio, and I don't know, what do they say, the blue and the blanche? I don't even know what the language is here. To Argentina with the blue and the white jersey. Matt Brill, the bond market needs to win next year after a horrific 2022. What is the path to total return next year in debt markets?